Record on this computer. Okay, I'm gonna admit a little bit more people here, and then I'm gonna make Arthur, where are you? Make host. Okay, Arthur, now you are the host. You gotta be fast, okay? When people start talking, not start talking. When you see that somebody forgot the microphone on, you put on mute. All right? It's super easy because when somebody forgets the microphone on, there is always someone screaming. There is always like a craziness. Never, it's never beautiful. So just make mute. Okay, guys. So please, again, please, if you can, put your camera on, microphone off. It's very important for me to get the feedback on your faces as I am talking so I can understand if you guys are getting what I'm saying or not. And today I'm gonna talk a lot about what really matters when you are checking, looking the indicators. What you have to keep looking and why. That's the thing that we're gonna cover today, right? So I hope you guys understand. By the end of this session today, you guys will understand why. Okay, why you are looking to the indicators. Rachel, welcome, my dear. When you came back this weekend?
Because you sent a link out, I thought I'd come and see how things are going. Because I lost my nerve. You know, I got ill a couple of months ago.
Mm-hmm.
I got
Mm-hmm.
a growth in here,
Yeah.
and I lost my nerve. And because I'd lost a bit of money, I was nervous.
Mm-hmm.
But I thought I'd see how things are going now.
Okay, welcome back. Welcome back. I hope you're feeling better now.
Thank you.
Okay. All right, guys. So again, we're gonna talk about what really matters when you are looking the indicator, where you have to keep watching and why. And with this understanding, you're gonna be ready to take better decisions. Now, let's start from the point that the Quantico cap system, it was made for you to follow the signals, right? So you can just follow, you can choose the one you're gonna follow: aggressive, extreme, moderate. You can just follow the signals and you will be profitable, period, right? Now we have people who feels like, oh, I can do better if I can learn the indicators myself, and then I can take more signals on the indicator, and that's okay. And actually, that's very good because sometimes you have a very good opportunities to take a trade. The system is not going to issue the signal because it's not like super aligned, but it is a good opportunity and it is there on the indicator, especially when market makers are actually accelerating the market. You're going to be able to see that. Okay. Before we go, uh, anyone here has an important question that you need to ask? That's something that's blocking you for something, or you, if you guys want to ask questions about the content on the end of the training, it's okay, that's all right. But if you already have a question, go for it as we wait for more people to join. Anyone has a question? If you do, raise your hand, like on the Zoom here. You press the button to raise your hand and then you ask your question. Okay. But for what I see, nobody has any questions so far. Okay, all right. Robert, you have? Go for it. Put on a mute and go for it.
Oh, okay. So I finally passed uh the Apex accounts. I got 5 accounts I passed last week.
Nice.
And I just want to do what's that?
Nice. I said nice. Awesome.
Oh, thank you. Yeah. Um, but I want to be really careful with it. I don't want to I don't want to blow them up right away. And I was just curious what probably just the best strategy to um get to my 2600 on all 5 accounts, and then just slowly work my way up to that. Then I'll then use that money to possibly buy more accounts. But I
Mm-hmm.
want to start out slow and
Mm-hmm.
just want to be smart.
Okay. It is, those are $25,000 account.
I'm sorry, 50,000.
50,000. How much
50,000.
is the drawdown on 50,000? 3,000?
2,500,
2,500?
2,500. Yeah.
2,500. Let me see here. 2,500. Okay, so last week I was talking with Alex about that. He was asking me, okay, I have a few accounts of, I guess Alex said it. I don't remember the size of the account. It doesn't matter. And he said, I wanna make $300 a day in each account. So how much or how big should I trade? How many contracts should I
Right.
trade to make $300 in each account?
Yep.
And if you are asking me about the strategy to make money and will be able to withdraw and everything, I would say uh, you have two things that you should focus. First is to trade with the indicator, with the aggressive, right? Follow the aggressive. Today you're gonna learn a little bit more about some possible triggers that you can take some trades, and you can do that as well as you see and get more confident that this thing is gonna work,
Right.
right?
Yeah,
But
absolutely.
in the end of the day, focus on the aggressive and follow the aggressive. That's the one thing that you have to do. If the aggressive doesn't give you signals, don't trade, because if you get the
Right.
habit to keep trading with just, oh, market's moving up, I'm gonna take I'm gonna buy. Market's moving down, I'm gonna sell. And for the past days, I told you guys, markets going down, but don't sell yet. Don't sell yet. When I say that, the price goes up because we see that's a momentum movement, but it's not going to continue. I'm going to show you how to see that. Um, Follow the aggressive, and in the end of the day, it's not about how much money you're going to make it. In the end of the day, is how much loss you can hold. That's the only thing that matters. So, for example, you have $2,500 trading drawdown. If you are trading with two micro contracts, any Q, right? We are talking about $4 per point. Okay. So if we divide 2,500 by 4, we're going to have 625 points. So if you, and that's a great number for you to have uh, as a cushion to make mistakes. 625 points, it's a lot. So you're not gonna break this account. Like I'm telling you, if you keep trading with two micro contracts following the aggressive, you will be able to make a little bit more than $100 a day, a little bit more. It's gonna be around 100, 150 every single day in each account, and you're not
Right.
gonna break. Then you're gonna say, Eric, but $100 a day in a $50,000 account, it is too low. I should be making more because it is a $50,000 account. I want to make more money, blah blah blah. And then I will say, you don't have $50,000. You have 2,500. That's the size of your account, 2,500. If you have a $2,500 account, two micro is already a lot of leverage. It is already a lot of leverage, all right?
Yeah.
So uh, again, don't think about it. $100 a day is too low. Don't think about that. What you have to think is how much or how many points you can be wrong before you break your account. 625 is good. I would say,
Yep.
guys, that for us
I could have,
to go for it.
I, so if I did that, then technically I would have in 26 trading days, I would have my 2,600 to get my first payout, to then buy more contracts, right?
If everything goes fine, if like the indicator goes good in every single day, yes,
Yeah,
you're gonna have a few bad days,
that
right?
sounds good. Yeah,
Uh, like I think with two micro contracts in 20 days, I think you're gonna be able to make more than $2,000. But uh, hope for 1,500. Hope for
yeah,
1,500 because you might have some bad days,
sure.
and for you to accept that it's okay to have a day that you're gonna lose $200, it's like a um, it's what's going to make all the difference in the end of the month, because if you
Yeah,
keep chasing your $100 a day, you might be breaking your account. Now, when I am trading on the live trading room, sometimes I tell you guys, okay, I'm done. I got my $1,000 today, I'm done. Oh, I'm done. I got my $2,000 today, I'm done. But it's not because I was chasing the trades to make $1,000 a day. I was just taking the trades. The market gave me 1,000. I'm okay. I check it and I go away.
good day.
Right? Yeah. So it's not about you will make $100 a day in each account. Forget it. You're not gonna make anything because you don't have the power. Nobody here. Doesn't matter if you are a good trader or not. You don't have the power to go to the market and make your money. Best scenario is you have a very good setup, and if you have discipline, you will be able to be there when the market gives you the money. All right. So that's the mindset. I'm gonna be there every day, 90/30. I will check the trades when the setup it's okay. And when the market gives me 100, 150, that's it. I'm done for the day. I'm going home. All right.
Okay.
Okay, guys, right? Cool. Now, since we are talking about that, before we go to the indicator, and that's very important, I'm telling Robert right here, it's not about $50,000. You don't have $50,000. You have 2,500. The money you actually have to trade is the size of your trading stop, your drawdown. All right, your trading drawdown. That's the size you have. It's not about how much money you're gonna make. It's about how much money you're gonna lose or you can lose before breaking your account. I would say that anywhere between 500 and 1,000 points is a good place to be very comfortable trading. 500 and 1,000. So you do your math. So, for example, if he has 2,500 and he's trading with two micro contracts, we are talking about $4 per point. He can goes back 625 points. That's a good cushion. You're not gonna break this account. It's not gonna happen that you're gonna go back 625 points without making money, right? It's not gonna happen. So that's a good size to trade. And second thing that you gotta have on your mindset is the cost of your business, right? The cost of your business. Doing business has a cost. Oh, but I'm doing trade because trade you don't have to buy stuff, blah blah blah, all the shit. Forget it. Every single business has a cost. If you don't have that on your mindset, man, like you are not doing a business. You are just gambling. All right. So I don't know if one of you guys here are own your own business. I know, for example, that Sebastian has a live studio, LED live studio. I know that because I was a partner before. Now he owns the whole thing. I'm gonna take the example of Sebastian right here. Okay, forget about the numbers. I just gonna take the example. So he has a business. This is the LED Live Studio. This is the place that we do all our launches, build it all, make the launches, and all the videos and blah blah blah. It's a huge LED studio with the best cameras, microphones, technology, internet, and blah blah blah, and all this shit. So it's a very very sophisticated place for you to do your lives, your podcasts, your whatever it is. there is a cost. So no matter what he's going to sell, no matter how many customers he's going to have on that month, he will have to pay the rent. He will have to pay someone to take care of the studio. He will have to pay for the equipment. He will have to pay a lot of things that doesn't matter. Internet, energy, like a lot of things, it's on the cost of the business. So let's say the cost of the LED studio just to be there is $10,000 a month, right? The cost of the LED studio is $10,000 a month. And we are not putting here the cost of the time that Sebastian spends there when he has an event or something like that. So I'm just talking about fixed cost, all right? So can you guys agree with me that every single business has a cost, no matter what business it is? No matter if you are an Uber driver, you have the cost of the car, you have the cost of the gasoline, you have the cost of your taxes on the car. No matter what, every single business has a cost. Okay. Now, trading is your business and it has a cost as well, right? So you have to put in your mind that there is a cost to do trading. On my trading, on my business, this is a cost that I found for myself. My cost to do business on trading is $200 a day, right? So, for example, $200 a day in 20 days of business, we are talking about $4,000 a month. $4,000 a month is the cost of my business. When I am trading, I know that this business that I'm doing right here cost me $4,000 a day, even though it doesn't cost me $4,000 a day. But on my mindset, a month, on my mindset, the cost of my business is $4,000 a month. And every day that I open my store, let's call my business thing as a store. Every day that I open my store, I have to be ready to deal with $200 cost. Okay, $200 times 20 days trading is $4,000. So every day when I start my computer, I open the platform, this is going to cost me $200. Okay, if you have this mindset that this is the cost of the business, you're going to be more comfortable taking your stops. So let's say let's do just like Friday. I open the store. I am ready because this 2 days is gonna cost me $200. So my mission is to end the day with a little bit more than $200. That's my mission. All right. And if I end the day with negative $200, on my mindset, I'm just paying my cost to be able to be on the market. Now, this is what we are doing. We are working on the market, right? Uh, let's bring this to the real life. If you are selling wallets, let's say you are selling wallets, right? And you decided you're going to sell that on any kind of marketplace you have on your city, farmers market or a mall or whatever it is. You will have to pay a cost to be there, right? Makes sense? You will have to pay to be on the market. You will have to pay to be there available to do business. Makes sense, guys? Or I'm making this too hard? Because I never know if I'm being able to send the message like it should be because of the English and all those things. But makes sense for you to understand that if you are going to sell wallets on any marketplace, you will have to pay your fees to be able to be there to sell your wallets. Yes, you will have to pay the rent or whatever it is. Same thing on the financial market. You will have to pay the cost of your business to be able to be there. And my cost for me is $200. So every day that when I start trading, I am willing to accept $200 in loss. That's the how much money I accept I'm willing to accept in loss. So I'm trading. I take one stop, $30. That's okay. It's the cost of the business. I'm gonna trade again. Another stop, $20. Now I lost 50. Another stop, $50. That was a big one, 100. Man, this gives you freedom to keep working. because I already took 3 stops. It doesn't happen so often on the platform, and I just lost it to $100. Now, think with me. This day is being terrible. We just took 3 stops and we are losing only $100 because I'm trading one micro contract. Now tell me, is this so bad? Like you open your business, you go to the market, let's say during the whole morning you took like 3 trades and you lost $100. Is this so bad? Like you guys think this is terrible or this is something you can accept? Tell me. Okay, so by your silence, I understand that this is something you can accept, right? If you don't agree with me, just say, because most of you are going to agree. So if you don't agree, just say. If you can't think like a business, guys. If you can't accept that in one day it's okay to take $100 stop, you are not ready for this. Like you are, I don't know, in what kind of business you think you are, because you are willing to go home with $20,000 a month. You want to make $20,000 a month, $10,000 a month, but it is a business that you don't accept to take $100 loss in one day or $200 loss in one day. If you understand that this is not a big deal, you're going to be able to keep going, keep going, keep going, and you're going to make money. If you are going to buy a Subway franchise, I think you're going to spend something around $500,000. And if your franchise goes well, you're going to take home about $5,000 to $7,000 a month. You know that? You guys know those numbers? You're gonna invest $500,000, around $500,000 to open a Subway franchise, and when everything goes fine, you're gonna be home. You're gonna walk home with 5,000, 7,000, best case scenario, $10,000 a month, and you're gonna have to put a lot of money, and you're gonna have to work a lot. And there is nothing wrong with that. What I'm saying is, this is business. This is how we do business. So when you are going to trade and you have on your mind that the only possibility is to make money, and if you close one day with a loss, this is the end of the world. This is terrible. This is not working. Man, you're not gonna be able to keep moving forward. All right. So in my case, $200 is the cost of my business. And why this is important to me? Because $200 is 100 points. 100 points. I have to be wrong 100 points to lose $200. It's a lot of points. It's not impossible. Sometimes that happens, but it's a lot of points. With this, I'm gonna keep trading. I'm gonna keep trading. I'm losing 25. I'm losing 30. I'm losing 50. Now I'm losing 100, 150, 180. I'm gonna keep trading. I lost $200. That's it for me. It was a bad day. I'm not making money. I'm losing money. Not necessarily. $200 is the cost of the business. All right. So I'm gonna call the day with $200 loss, and next day I'm gonna be alive again. Now, I'm going to start trading. First trade, $30. Second trade, another $30, 60, third trade, $100. Boom, that's it. I'm calling the day. Because on my mind, I already paid my costs, $200, and I'm still profiting like 100. On my mind, I paid the cost right there on the first trade, and then I'm keep going, keep going, keep going. When I get like 100, 100 and something, I'm calling the day. That's it for me. And I'm gonna walk home happy because I have $100 in each account. And then you're gonna think, Eric, but 100, like, why you're gonna be able? You're gonna accept to lose 200, and you're gonna be okay with 50, 80, or 100, because I'm not gonna lose 200 every day, but I'm going to make 50, 70, 80, 100 every single day. And then in the end of the day, the month, even if I have like one or two bad days, and I lost $400, in the end of the month, all the days that I'm making 50, 80, or 100, is going to make me profitable. It's about every single day making a little money, little money, little money. But I want to make $1,000 a day. Buy a lot of accounts. Don't try to leverage the number of contracts. That's why people break. The number of contracts, and shouldn't be the number of contracts. It has to be the number of accounts, right? One $25,000 account, it's one micro. $50,000 account, two micro. I want to put a mini. Don't do it. Buy 10 accounts or buy 5 accounts. Like Robert right here, he's trading with 5 accounts. 2 micro per account is one mini. It's the same thing, right? So he's pretty much trading one mini with $500,000. Now you see how has to be this margin in everything, right, guys? So Thursday, tomorrow, I'm gonna be trading. I'm gonna open my platform and I'm gonna be willing to lose $200. Accept, not willing to lose, willing to accept $200. If I lose $200, I am okay. This thing is still working because I'm not losing 400. I'm not losing 500. I have 100% control of the cost of my business. 200, I stop trading. That's it for me. I'm gone. All right. Now, if Thursday, Tuesday, I make, I don't know, 50, 60, 80, doesn't matter. Anything that the market gives to me, and I'm going to tell you guys when you know the time to stop, I'm walking home with 50, 60, whatever it is, right? So some people will think, but you're going to lose 200 and make 50, but it's about making 50 every single day, okay? Now, when you are trading prop firms, you are in the best business in the world, best business in the world. Think with me and answer this one for me, okay? Anyone here can answer this one for me. I'm gonna be accepting $200 a day in loss, okay? So if on my account I can lose $1,400 on down the 25. I can afford to be totally wrong 7 days in a month. It's almost half of the month. 1/3 of the month, I have to be totally wrong, right? Now, if I'm losing $200 every single day that I am totally wrong, and that happens for 7 consecutive days, I'm going to be losing $1,400, right? $1,400, 7 days, 200. That's the money I'm losing. And then my business, this business right here, is going to break when I have 7 days paying the cost with no money. Just open my store with no customers. I'm just opening my stores. I have no customers. I'm only paying the cost, and I have financial health to hold 7 days. After 7 days, I'm losing $1,400. This business is done. I will have to open another one, right? Okay. That's the reality. Now, how much money I am actually losing when I break my business on $200 a day in one account of $25,000? How much money I really lost on this business? Someone open the microphone and tell me so I can see that you guys are still following. Nobody?
$180 when I pay 150 for a live account and $35 about.
Yeah, well, let's talk about just one account. Let's talk about just one account. So you're gonna be losing 100 and something, right? Because that's the monthly fee of the account.
Yeah.
Right. So my business has a $200 cost per day. I am able to hold my business losing money 7 days. I will break when I lose $1,400. But in the end of the day, I'm actually losing only $100. That's the reality. Only 150. Let's say the fee to approve the account and the fee for the real account, right? In the end of the day, I'm just losing $150. So I'm not losing 1,400. But if I keep going, and I make the money, make money, in the end of the day, all the money that I make, it's real. It's 100% mine. So this is the best business in the world, because I'm telling you, the cost of your business is $200 a day. But that's not what really gonna cost you. It's gonna cost you, I don't know, $10 a day, something like that. All right. But if you make money with this business, the money you're gonna make, it's gonna be real. So all you have to do is to calm down, relax, and work this business as a businessman. All right. If you have $200 cost, you go up to the 200. You don't lose 250. You lose 200 and you stop trading. If the day is doing good, you got 1, 2, 3 good trades and you made $80, stop. I'm talking about per account, because you already paid your 200 cost of the business and you made another 80. And what's going to make you money is not $1,000 a day per account. What's going to make you money is 50, 80, 100, 50, 40, 30, 20, 10. It doesn't matter. You're going to take the money that the market gives to you. Makes sense, guys. This mindset for you guys to be there trading, or I'm making super confused or whatever. Just let me know. You have any questions about that, about the mindset you gotta have? One, it's not about how much money you're gonna make. It's about how much money you can afford to lose in one day, right? Two, you're gonna choose the size, measuring the points you're gonna hold before breaking your business. So it's not about making $200 a day. It's about losing $200 a day. That's how you're gonna calculate the number of contracts you're gonna do it. Three, it is a business. So you gotta have a cost, and you gotta be willing to accept that one day you're not gonna make money. You're just gonna pay the cost. Can you agree with that? Accept that one day you're not gonna make money. You're just gonna pay the cost. Accept that, because some other days you're gonna make money. Okay. And fourth, what actually is gonna make your money are those days that you're going to make like 50, 40, 30, 10, 20, 100. It's the consistency of making a little money every day. All right. 5, you don't increase the number of contracts. You buy new accounts. That's it. Don't put more contracts in the same account. Buy new accounts. That's how you're going to grow your business. All right. And 6, follow one strategy. Either you're going to follow the aggressive or the extreme or the moderate, but pick one and follow one. Or you're going to follow the aggressive, but you're also going to learn how to read the indicator, and then you're going to take your own trades. It's all good as well if you want to do that, right? But follow one strategy. You got to have the discipline. Don't trade if you don't see your setup there. You don't see your setup, don't trade. Because the best way for you to lose money is, oh, market's going down. I'm gonna take, boom, and then market goes up on your face. Oh, now it's gonna break. Market's gonna go up. You buy, boom, market comes back on your face, right? It's not a setup. You just felt like, okay, the market's gonna move, and you took the trade. That's the best way for you guys to break your account. Okay. This is the mindset to start. You don't even trade if you don't have this mindset. It is a business. I have a fixed cost. I'm going to make all the money that the market's going to give to me on my setup. I will have to stop when I reach my $200, and I should be stopping when I feel like it's enough for the day, because I know that what's going to make money is the consistency, not the amount. Doesn't make any sense for you to make $500 a day in each account, and then the day that you're going to lose 1,000, 2,000. You're going to break the account same way. All right. So far, so good, guys. Any questions so far, or can we go to the to the indicator. No questions? All right, so let's talk about the indicator, some things that I want to show you guys, and I think you guys should know in order to take better decisions when you are going to trade. First of all, let's talk a little bit about VIX and yields. Let me share my screen with you guys. Okay, you guys can see my screen right here, right? Right? You guys can see my screen? I think so. I think so. Let me put this in here. Okay.
Yes.
So on my chart right here, what I have is only the things that I really care when I am trading, right? So I have the absolute gamma exposure history for SPX and triple Q. I have the dealer directional flow for SPX and triple Q, and absolute gamma exposure for SPX and triple Q. Those guys are the most important Greeks and everything that I'm watching. Then I have the NDX candlestick in SPX big because I want to see all the levels and everything. Momentum, scale of volatility, VIX, and yields. This is right there where I can see all the time. Now, I have more information that I put here because I don't look this information all the time, which is the dealer directional open interest, strength of the direction, analyst chart, market sentiment, the table, economic calendar, and the news. I don't have to keep watching this thing all the time. So it's on the bottom of the page, right? So for you guys to understand what I am putting on my screen, what I'm going to do is I'm going to take a print of what I have here. This is what I have here. And I'm going to put this on the Discord. This is what I have here, right? And then I'm going to take a print in how I built my screen. And you guys can try to build yourselves, right? Remember that to build this thing, what you have to do is the screen will be locked. Unlock it, click on plus, delete everything, just bring back what you really need, save. It's going to be everything on that side. And then with the thing unlocked, you can just drag and drop and create your screen the way you want it. All right? This is it. Now, if you don't want to go all the trouble, you can click here and you can choose basic, intermediate, advanced, or you can create your own. So I create my own. It's the new, right? That's the novo, the one that I have. So you can just go there, layout name, you give a name, plus, and then you're going to create the layout you want it. And then that's it's going to be saved there for you. All right. Okay. Now, talking about the indicators, the first thing that I see always is VIX and yields, but most of all VIX. Okay. Now, let's talk about VIX. Do you guys know why we actually look VIX? Why VIX is important? Anyone want to give it a try? Why VIX is so important? Okay, nobody saying anything. That's all right. VIX is important.
Connected to the interest rates, right?
I'm sorry, Robert, say it again.
Is it connected to the interest rates?
Yes. Now, I'm going to tell you why. Most of the funds in the United States, pension funds, hedge funds, some institutional funds, they cannot go short on the market. They don't have the license to trade short. Most of the funds, they can only go long. They can only buy. You knew that, or some people doesn't know. It's not every single fund that can go long and short. Some funds, they can only buy. You guys remember GameStop breaking a lot of funds? Why was that? Man, if GameStop is going up, just sell it. Do a hedge, right? Sell it. But they were not able to sell because some funds, they can only go up. They can only buy, all right? Now, if you can only buy, That's a problem because you are buying S&P 500 and the market's coming down, and then things are going bad and the market's gonna come down forever. What do you do? So in 1993, I guess, some guy came in with an idea. What if we create a new index that goes exactly against S&P? So if S&P is going down, this new index is going up. It's going to be a volatility index of S&P, meaning that I'm buying S&P. But if the things start getting ugly, I can sell my position on S&P and enter a position on this new instrument because this guy is going to be going up. Right? It's a very, very smart solution for people who can only buy. All right. So now you have a business that you can only buy. You cannot go long short on S&P, but you have two indexes. You have the original one, S&P 500, and you have VIX. When this guy is going up, this guy is going down because that's how the index is going to work. But if this guy is going down, this guy is going to go up. So if you only can go long, if you can only buy, you have the solution right here. You buy S&P 500 when it's going up, and you buy VIX when it's going up, right? Now, VIX, the main reason that we have VIX, it's because the hedge funds, no, not the hedge funds, the funds, the institutional, they need hedge. Who really has money, like let's say that this guy has $10 million, $20 million, $1 billion on the market. He needs to hedge this thing, right? So they are getting a position on S&P 500 and a different position on VIX. If they feel like, man, the market is gonna get ugly, they're gonna sell, they're gonna close their positions on S&P 500 and they're gonna open the positions on VIX. Make sense? So that's why one goes up, the other one goes down. Okay. But VIX, when you are talking about VIX, we are talking about the S&P 500. That's where we're going to hedge S&P 500, right? So VIX going up, it's why, Eric, VIX is go up, I should go down. Because if VIX is going up, the meaning is they are closing their position on S&P 500 and they are buying new position on VIX. So VIX going up, meaning market's gonna go down because they are buying new positions there. Okay. Now, and why is that? That's why we call the index of the fear, because they are afraid the market's gonna melt. They are afraid that the market's gonna go down. It's all about feeling. It's not connected to the macroeconomy. It's not connected with everything that's happening in the world. It's connected on the feeling about S&P 500, which for us is very important because S&P 500 and Nasdaq for us is pretty much the same thing, right? So they feel S&P 500 is going to go down. They're going to sell. They're going to close S&P 500 and they're going to buy VIX. Now they feel that, okay, we are going back up. They're going to close their position on VIX. They're going to buy back on S&P 500. That's why it moves like this. Make sense to you guys? VIX? All right. So, but we have two indicators that we have to combine. Now, VIX, you already understand it. That's a hedge for S&P 500. So if the hedging is going up, it's because the main one is going to come down, right? So we already understand the VIX is connected to S&P 500. But what about yields? Yields are the papers of the American government. That would be the most, I would say, the most secure paper that you can buy. The American government is going to pay you because you have those papers there. When you are buying yields, right, you know that this thing is gonna pay you back in 2 years or 10 years. That's the American government bonds papers. Okay. Now this one is connected to the whole economy. And why is that? When we are looking to yields, we have to think the investors, they are looking for risky or they are looking for more guarantee? Because the yields are going to give you profit, but it's going to be always small profits. It's not going to be crazy as you can get on Nasdaq, for example, right? So yields is guarantee. The government will honor the yields. You're going to get your money, and the yields is going to fluctuate around the interest rates, right? So you're not going to lose money anyway because it's a paper that you're going to put your money there, and this paper is going to fluctuate around the interest rates. So it's super safe. You're not going to lose your money if you put on yields. So far, so good. But you're also not going to make that much money because fluctuates under the interest rates. So you know that's going to be around that much, right? But it's safe. Now, if you are an investor, what are you going to think? Okay, the economy right now is in a way that I think the companies are going to go up, or gold or oil or whatever it is. You are working with Nasdaq. Some people are working with oil. Some people are working with gold. I don't know. But on the market that you are, you feel like, you know what, man, this year is going to be an amazing year for the big techs. Economy is going to skyrocket. So I'm going to take some risky. I'm going to buy some shares of Amazon, Apple, or whatever it is. So you are willing to take more risky. So you're going to move your money from yields, which is very safe, and going to put your money on the companies because it's not so safe, but the profit could be 10 times bigger. And that's what investors are looking for, right? And now we are talking about people investing on companies, gold, oil, anything that you have more risky. Okay, cool. Now you feel like, man, economy is not so good. The companies are not doing well. I don't know. I don't want to take that risk. So I'm going to take my money back from the companies and I'm going to put on yields because here is a place that I'm going to put my money and I know I'm not going to lose. I know that's going to be okay. So when we are talking about yields, we are talking about the whole economy, not only SP. We are talking about every single thing that it is risky. We are talking about S&P, Nasdaq, Russell, Dow Jones, some other assets, some other instruments, some other stocks. All right. So when you put everything together, when you have risky, it's gonna go down when yields are going up because it's the meaning is on the macro economy they are moving their money from risky places to put for safety places. Now, when we see that yields are going down, it's because they are moving their money from yields and taking a little bit more risky because they want to make more money and the moment is appropriated to go for more risky. So now when you put together VIX and yields, you have a very, very good indicator because yields going up is telling you that the market is afraid. They are selling S&P 500 and buying VIX. And then when you see that yields are also going up, you know that this is happening in the whole place, not only on S&P 500, with every single other risky instrument. Right? Makes sense now, guys? That's why when one is going one side and the other one is going the other side, we don't have the whole macro confirmation. Now, VIX is going down. It's meaning that they are selling VIX and buying S&P 500. But now yields are also going down, meaning that like all the investors in every single market are willing to take more risky. So the moment's more appropriated for more risky. So the companies probably are going to go up. Okay. So that's why we use VIX and yields. So far, so good. Any questions so far? No? All good? Okay. So let me share my screen with you guys and I'm going to show you something important. Okay. So take a look here on VIX and yields. The numbers that you guys have here, most of the platforms, they don't give you this number. Actually, I never saw a platform giving you all the numbers. Most of the platforms are going to give you the number, the variation of VIX when the market closed, since the past day closed, right? So, for example, here we have the numbers. Today we have the numbers of Friday, I guess. So Friday we close it, and then market open again. And since the closing on Friday, we are already 2% down, 2.35% down on VIX. All right. Okay. And most of the people work with only this number. So what does it mean? VIX is going down 2%. The market's going to go up, right? Not necessarily. That's what most of the platforms is going to give to you, the numbers since the closing. But now we have here the numbers since the opening of London. So since opening of London, VIX is already going down 2.58%. All right? Okay. But since the opening of New York, VIX is actually not moving that much. It's 0.64. Okay. So if we see that this thing is increasing to the downside, it's during the day we are going down, like a market is going to go up. If we see that's increasing to the upside, meaning that market's going to go down. But what really matters for us is this number right here, since New York opening, New York session. Okay, guys, cool. Same thing we have here on yields. What really matters is not the real number of the whole day. Most of the platforms is going to give you the number of the whole day. Doesn't matter for us, because you see, we had a gap when the market opened on Sunday, right? And this gap is here, 2%, probably. So doesn't matter. What we're going to see is the numbers changing from New York. Okay, cool. Now, let's talk a little bit something that's very, very important for you guys to understand. On here on Friday, we broke 5,300. At this time right here, we broke 5,300. 5,300, if you guys remember, Friday, it was a big bar right here, 5,300. You remember that? Friday, we had a big bar, and we were a little bit below the bar. And let me bring the replay controller save. Okay, now let me put the replay controller down here. Okay, now let's select Friday around 10. Okay, so 10, it was already there. Wait. Well, the price is not moving, but this is what we were seeing on Friday, I guess. No, it's not moving. It's not moving. Back to live May, Friday, around 10. Wait, let's see if it's not changed. It's not moving. Let me reload. Let me give it another chance. Otherwise, you guys will have just to believe me. Yeah, not working. So doesn't matter. Friday, we had this big bar of 5,300 right here. Okay, where was all the interest on Friday? Okay, now you are on the market, you are watching what's happening, right? So what happened was we broke 5,300 right here. Boom, we broke. And it was supposed for us to sell right here. When we were going up, going up, going up, when we reached 5,300, it was supposed to sell because it was the biggest bar of the day, right? But if you guys remember, we didn't sell. Okay, if you guys remember, we said, man, I'm not gonna sell. I'm not gonna sell. It's not gonna give a bounce. I guess at this moment we were already we were still on the live trading room, so we didn't sell because VIX was going strong down, yields was going strong down, and most of all, the new indicator you guys have to keep watching, the dealer directional flow. The dealer directional flow, we had something around 75% calls and 25% puts. So call is equal, it's just like people buying. Puts, it's people selling. All right. So we had way more people buying, 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 buying. We didn't have a balance between calls, puts, and calls. If we had a balance, we could be selling here on 5,300. We would have a bounce, but it was super strong. Now, how do you know if it is going to be a bounce or it's going to break? Take a look in how strong VIX is going down. Take a look in how strong yields are going down. And take a look on the proportion here between puts and calls. If it is more than 70 or 65, it's going to break, right? If you have something around 50, 55, 60, it might have a bounce. 50, 55, you will have a bounce, okay? Are about more than 65 for sure is going to break. And then we had 70, and then all the VIX going down, yields going down. We said it's not going to break, and then it's not going to bounce. And then we broke, boom, 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 boom. We went all the way with no stop up to 313. And then on that moment, I told you guys on Discord, now 5,300 is going to become a support, because now we still gonna have more calls than puts during the whole day. VIX is going down, yields is going down, but 5,300 is still huge. So probably it's not gonna break back below. It's gonna hold here. It's gonna become a support, right? I told you guys that on Discord. You go back on Discord, you're gonna see. But what I really wanna show you guys is this. We broke 5,300. We went to 5,310, the selling zone, and then the price started coming down. Now take a look right here at this moment. At 11:40, we touched 5,301. It was the lowest one, 5,301, 11:40. Okay. Pay attention, because this is going to be a very, very, very good trading opportunity for you. Now, what you have here, you have a very, very important level, 5,301, but you don't know if it's going to bounce or it's going to break, because we have this huge bar here. 1 minute, a bar like this, you don't know what's happening. So now we touch 5,300, but we don't know if it's going to break or it's going to bounce. Okay. Now we bounced, we came back to 5,300, and now we are sure this is going to bounce. I have 100% sure that this is going to bounce right here. And why is that? Because take a look on the chart right here, and you guys remember that VIX moves together, right? On different position, on different direction. Okay. Let's find the VIX at this time. Let me find the VIX here. It is 11:40. What is this? 11:40. 9, 10. Here, no. Yeah, here. Okay. Now, look this candle right here. Look what's happening here. Boom, 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 boom. This candle right here. 1140, 1139, right? You guys can see that. You guys remember you are there on the market. And then what happened with VIX? 1140. We have this peak right here on VIX. This peak equals this peak, all right? But now we have some bounce here, and then we have another bottle here, which is deeper, right? And look what, and that was 1152. Look what VIX is doing at 1152. You guys can see here 1152 on VIX. Can you see that? So what we have right here, we have a VIX divergency. It's a very good signal for you to trade, meaning that the price came to almost 300, a little bounce, and the price came to the 300 where it was supposed to bounce. The price came all the way to the 300, but the fear is not coming together. To be fair, we should have this peak should be a little bit above this one, right? Because I have this difference here, and then I should have a difference here. But what's meaning is we went all the way down, a little bounce, and we went deeper before the bounce. We went all the way up, we bounced, but we went even more up here. VIX is not coming. The price is coming, but VIX is not coming. It means that the emotional on the market, it's not following the price. The price is just coming by liquidity. We don't have the reason to go there so deep. So if VIX is not coming, and we have a very powerful level here, and we have this divergency, it's going to be a bounce. Like 100% of the times, 100% of the times, when you see a very important level with VIX divergency, it is a bounce. Just take the trade. You guys understand that, or it is a little bit confusing? But because when the market's moving, this is going to be on your face. You're going to see markets going down, VIX is going up. Then you're going to see a bounce, you're going to see a bounce. Then you're going to see the market going even more deeper, but VIX is not coming. So wait a minute. The price is moving even more deeper, but VIX is not coming. Something's wrong. Yes, what is wrong? The VIX is not going to go. The VIX is holding here on this important level. The market's going to bounce. And this is what happened. All right. This thing happens almost every day. That's called VIX divergency. You guys got it. This is something that you have to be watching on the charts. You're not going to catch this movement every day, but when you see, take the trade because it is almost 100% good trade. All right. Any questions so far about VIX yields and the VIX divergency? Any questions? Look, guys, I know my English is not the best. I know I have a lot of accents. I know I make this thing very hard for you guys to understand, and I appreciate it. You guys are trying your best to understand. We are doing our best on my side, on your side. So I understand if I'm not clear on the message. If you have a question, let me know. Oh, do you have a question, or are you just saying hello?
I have a question. What's the relation when we have VIX going one way and yield going the other way, the opposite way? What does it tell us?
Yeah. The question is, I have VIX going one way and yields going another way. We know that the perfect scenario, we need VIX and yields going both ways, right? So VIX is telling you exactly the sentiment on S&P 500. Exactly the sentiment on S&P 500. Yields are telling you the sentiment of the whole market. on the whole risky market, let's say. Now we are talking about S&P 500, Nasdaq, Dow Jones, Russell, and other indexes that it is more risky. So if yields are going up, meaning market down, and VIX is going down, meaning market up, you know that this is happening only on S&P 500. It's something connected to S&P 500, not the whole market. To give you a little bit more consistency on your position, it's better for you to wait for the fear goes to the whole market, and then you're going to have this information on yields. Got it?
Yes, understood.
So what is telling us is only the S&P 500 is afraid on this moment. It's not something happening on the whole market. When you have VIX going up and also yields going up, then you know that this feeling is about everywhere, is on the whole market. It's give you more confirmation. Okay? All right. Any other questions about VIX or yields, VIX divergency? No? If you have a question, just raise your hand on the Zoom app. Okay. All right. Let's go back to the screen. So that's why, guys, the first thing that I keep watching all the time is what move VIX is doing right now. All right. And if this movement is the same that we are having here on yields. I need to know that the sentiment going up or going down is just on S&P 500 or is on the whole market, okay? But since we are trading SP and Nasdaq, it's like the most important is VIX, and this one is just extra confirmation. All right, let's make this clear. And it's okay because we don't have to take all the trades. We can trade only when we have extra confirmation. All right, it's a choice that you're gonna make. If we have VIX is the most important for us, what we are doing here, the sentiment, but the extra confirmation is gonna come on yields, right? And okay, so should I just follow VIX? No, because you also have to consider the important levels here, like the important lines and everything that we have. Okay, guys, cool. So this is the first thing we take a look: VIX and yields. Always important levels. For example, if you have, if you are willing to sell here on 5,300, for example, you came here, boom, you got a bounce, and boom, you just broke this level right here on this candle. You broke this level, and you're gonna feel, man, we just broke the swing. I gonna sell right now because this thing is gonna go down. Listen, the guys who are reading charts, the guys who trade with graphic analysis, they're gonna tell you we have a high and a lower low, a lower high and a lower low. So the market's clearly going down, We have one high here, a lower high here, another lower high here, and you have a low low here, a low low here, a low low here, right? Guys understand what I'm saying, right? I know I'm not saying the right way, but I hope you guys understand. Okay, now one guy taking a look on the graphics, they're gonna tell us, okay, this market's gonna go down because the highs are getting like smaller and the lows are getting bigger. So we broke this level, we're gonna sell. No, man, you don't do that because you are on the 5,300, which is a huge bar here. We know we have a lot of interest on that area. It's not gonna break, especially if you have a balance or more calls here, right? So it's not about the drawing that the chart is doing, it's about the levels. So what we have to do is take a look on the levels, take a look on VIX and yields are telling you, and take a look on the flow. And then you're going to be able to take a decision if it's going to bounce or not. All right? Okay. It's not about the drawing that the market's doing. Okay, so for example, right here, if you are a graphist, you're going to see shoulder, head, and shoulder on upside. It's a shoulder, it's a head, it's a shoulder. Everybody would say, okay, the market now is going to go up because it's a shoulder, head, shoulder pattern. It doesn't mean anything. You can see here whatever you want to see. It only means that the market draw one shoulder, head, and shoulder. It doesn't mean that the market is going to go up. If tomorrow we have more puts than calls, the market's going to go down, no matter, right? So never believe this graphic thing because it doesn't make sense, right, guys? What really makes sense is the levels that we have because we have interest on those levels, all right? Okay, so we are done with the levels. We are done with VIX and yields. Now let's talk a little bit about those guys right here, right? Now, dealer directional flow. This is a very special indicator, and it's not about the flow. It's not about what you have on the market. It's not about what people are buying and selling. Okay, let me open my tradovate here. Let's see if I can open tradovate just to show you guys what I mean. Okay, you guys know when I see some liquidity above, I see some liquidity below, blah blah blah, all this thing. You guys know that, right? When I say I see some liquidity, what I'm saying is I'm gonna go here super down, drag and drop, and then I'm gonna select MNQ M4. Boom. And here I'm see the liquidity on the market. I can see right now that we have 67 people selling here. 67 contracts on 18,900. Where is 18,900? Around this level right here. All right. So guys, I just gonna, let me put one here. I just gonna sell 900. Let's see. This is how people trade when they look to liquidity. I'm selling here on 18,900, right? And why is that? Because here I have 20, 20, 30, blah, 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 blah. But here I have 68. Today is very, like, we have no volume, doesn't count. But 63 is the biggest number on the whole thing that we can see here. So now I'm telling you, I can see liquidity on 18,900. Most of the days, you're going to see something like 500 contracts here. All right. So what you can do, now I have 71. Now I have more people putting orders here, more people putting orders here, right? So this is something that you can do to see liquidity. But this is going to drive you crazy. Now we are getting super close, super close, super close. Let's see what's going to happen, right? Now, a lot of people trade like this. They wait to find a place on the super down here to find a very imbalance between the number of contracts everywhere, and they just going to put the order right here. Okay, so the market will reach this liquidity. The market will reach this point. So that's why sometimes I tell you guys, okay, I can see a lot of liquidity on 18,900. So the market's gonna get there. Let's buy. So I could be buying when I saw that and actually selling here. I could be the one selling to this guy right here. Can you agree with me? For example, let's say I have 500 contracts here and the price right now is right here. I can buy right here and put my exit right here because I know the price is going to come to this place. All right. But it's not 100%. And the tool that we have to follow this whole thing, it's gonna giving us better information, like a more clear information and everything. Okay, guys. So you guys see, it's getting really, really close. It's not there yet, but I think if we touch this level, we're gonna go down. So I can just put an order and see what's gonna happen. Especially because, where is it? It's way bigger. From 69 to 21 is a big difference. So probably we're gonna have a bounce right here. Okay, cool. Can you trust this thing 100%? Yeah, not really. In this case, that could be a good trade because I have the liquidity in a place that I have a very, very strong level. So it got my order. I can just put my exit here and see what's gonna go. All right. So in this case, that could be a good trade because besides I had 70 contracts right here, it was way more than normal. I had a very, very powerful level, which is 18,900, right? So I'm pretty sure this trade is gonna work. But can you trust this thing forever? Can you really, really trust this thing is gonna work? Not really, because there is nothing to guarantee that I'm not gonna have another crazy guy putting more orders right here. So for example, 9,000 and 18,901. So people are starting to put more orders above. So most of the times it's gonna work. Sometimes it's not gonna work. All right, guys. So it's not 100%, but this is when we are talking about liquidity. Let me exit with like a break even, but this thing I think is gonna bounce. Doesn't matter. Now you guys understand when I'm saying that we have liquidity in one level, another level, or something like that. This is it. This is one of the tools that we keep watching to trade liquidity or to understand the liquidity. But the most important thing on this tool is, for example, you guys remember what happened on Wednesday. We took a trade and we exited the trade like 5 minutes later, 5 seconds later. We took the trade and we exited the trade 5 seconds later, because it wasn't a situation almost like this. We had everything telling us to buy, right? We bought it. By the moment that we bought it, we saw a lot of liquidity coming, like just like right now. Let's say we bought it here, and then from nothing we saw like a 100, 100, 100, 100, this thing getting crazy, like in the same moment, like changed everything. Then we exited the trade because we saw a lot of selling pressure on that moment, and then we exited the trade 5 seconds later, and actually it was good because the trade came back almost 50 points. All right, guys. So this is how we see the liquidity on the market, which it's not this thing right here. This thing is not about liquidity. Okay, this thing is about is a special calculation putting together the premium that we're gonna have on that level, and the intrinsic and extrinsic value on that level. So it's not about how many people are buying or selling. It's about the intrinsic and extrinsic values on that level, on that moment. And this calculation is very fast. So it's not actually more people are buying or more people are selling. It's more likely right now we have way more interest selling than interest buying, right? And that's why I can tell you what's going to happen, not what's happening, because the liquidity, just like I showed you guys, is telling you what just happened. A lot of people buying, a lot of people selling. What I'm showing you on the dealer flow is telling you what's going to happen, because we have more interest in selling. It's better for you to sell, like the premium will be better if you are selling right here, or the premium will be better if you are buying right here. So this indicator shows you what is the best interest of the institutional. So when you see that the best interest of the institutional right now, it's on calls, the market's going to go up because the institutional see better advantage in buying. If you see we have more interest in puts, the market's going to go down because the institutional can see better advantage in selling on that price right there by the calculations on the intrinsic and extrinsic value of the options on that price. Got it? The formula, forget it. You're never going to learn because not even I know the formula, right? But that's something that we develop right here on Quantico Cap. There is no other place that you're going to find this indicator because it doesn't exist anywhere. We develop ourselves, and the only guy who knows how that works is our analyst and our programmers, right? Now, going back there, you're going to have here buys, puts and calls. That could be balanced, or that could be way more puts than calls. And then you're going to figure out where the market's going to go by these puts and calls, okay? So, for example, in a day like that we broke the line in the sand, we broke the 10 points beyond the line in the sand, and we keep going down, 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 down. A lot of traders are going to lose their money because they will think, okay, now here, that's the support. We're going to bounce here. So they're going to put a lot of contracts here on the bounce because, man, this is a very, very strong support. And you don't even have a chance to protect, guys. This thing broke, like not even a chance to protect, right? So this is how trades are going to break their accounts. Oh, you know what? But I have another support here. But I have another support here, and I have another support here. And you spent your whole day trying to find the bottom of the market, and you just can't. And that happens a lot, much more than you guys can think. And the only way to avoid that, because VIX is going to be going up, yields are going to be going up because the market's melting. So you're going to see those guys going up. But when is going to be the bounce? When the market is going to correct? When the market is going to stop? This is the tool who's going to talk to you when. Like if in a day like this, you're going to see 75, 80% puts. So don't even try. Don't even try. Don't put your buy here. 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 Don't even try. Here, you had a lot of time to buy. Probably when we were right here, we saw a balance here, and then that could be a good moment to try to buy. But during this whole drop, this indicator was telling you we have 80% puts. And that was the reason that we did not sell here on 5,300 right here, because since the beginning of the day, we were saying we're going to sell on 5,300. That's the place we're going to sell. This red line was right here. That's the gamma level. That's the place we're going to sell. But when we touch this level, this guy was 75. Man, it's telling you it's more advantage for the institutional to buy. The intrinsic value, the extrinsic value is telling the institutional that they should be buying. So don't even try. And then that's what's happening, all right? So this is how important it is, this indicator. It's going to tell you when the movement is going to keep going and when the movement it might have a reversal. If you have 55, 57, 58, 60, it's not so strong. Anything above 65, 70, like forget it. The movement is going to keep going. All right, guys. Cool? Cool? So far, so good? All right. Now, let me tell you one secret about that indicator, the 55 or the very good imbalance. You guys know we have the VWAP, right? And most of the times, we're going to have a good bounce on the VWAP. Most of the times, we're going to have a good bounce on the VWAP, right? And then, I guess 2 months ago, I had one Brazilian user, because in Brazil, this indicator is very, very expensive, right? In Brazil. Right here in the United States, this indicator costs you $200 a month, which is pretty much one dinner. One good dinner with your family, you're going to spend $200. In Brazil, this indicator is almost like the minimum wage. Like a lot of people has to work the whole month to be able to pay this indicator. So it is expensive. And then I got this guy in Brazil saying, you know what, man, I already learned that the VOAP is the most safest trade. I'm going to cancel my subscription and I'm just going to trade the VOAP. And that lasted like 1 week. 1 week later, he came back with no money because like all the trades he took on the VOAP was wrong. Now, how can you actually trade the VOAP? You guys can see now we don't have the VOAP. We have the POC, POC, the POC line, which is almost the same thing. The VOAP is going to tell you the fair price since the beginning of the session, since 6 p.m. of the last day, because the market opened 6 p.m. All right. Today, the market that we are having today opened yesterday at 6 p.m. You guys know that, right? That was the Asian section. We have Asian section, we have London section, and we have the pre-market, and then we have the New York section, and then the post-market. That's the sections that we have, right? So the VOAP is going to give you the fair price starting on the Asian session, which works most of the time, works fine. The POC is going to give you the fair price for the past few minutes or hours, where actually we had the most numbers, the biggest numbers of negotiations. So the POC is more powerful than the VOAP. So the POC is the good line. Sometimes you're going to have the POC on the same level than the VOAP. Sometimes it's going to coincide the same levels. It makes way more powerful line. If you have POC and VOAP together, man, is a bounce. All right. Now, how are you going to know if this is going to be a bounce or a break? There is only one way to see if it's going to be a bounce or a break. Take a look on the flow, dealer flow. If the dealer flow is 50-50, 55-45, 58-42, it's going to be a bounce, right? Anything, the dealer flow telling you that we have a balance, 100% bounce. Never talk about 100%. Let's talk about 95% a bounce because we never know, right? But if you have POC, VOAP, the price is touching either the POC or the VOAP or both on the same time with 55, 45, 56, 58, it's going to be a bounce because we have a lot of bots trading the POC and the VOAP. That's how the institutional trade. We have bots trading that level. So we know we're going to have like a wave of bots trading when we touch the POC or VOAP. But if you have an imbalance, 65, 70, forget it. It might be breaking, right? So it might be breaking. So you don't trade the break because it might be breaking. You only trade the bounce when you feel like you have 55, 50 something on this level, then you trade the bounce. If you have anything more than 60, 65, you don't trade at all. You don't trade the bounce, you don't trade the break. Make sense, guys? All right? Okay. Now, those bots, the institutional bots that we see, like that's why the price moves that much. They are not trading like us. They are not trading to make 5 points. And that's why it's so important for you to understand how this thing works on POC or VOAP. Those bots are there to trade 1 point because those bots are going to make 5,000 trades a day. Each bot that. And how is that possible? First, those guys don't pay fees. They don't pay the fees to the broker because they are the ones. They are the brokers. They are the banks. They are the institutional. They are the guys actually uh, uh, building the market, right? They have their servers inside the Chicago Mercantile Exchange. They have the servers right there. They are inside the stock market. They don't have lag, they don't have delay, they don't have anything. They don't have slippage, they don't have anything. And they don't pay fees because they pay something else there, they don't pay fees. So for them to take a trade and make 1 point, it's a very good thing. So those bots, they trade for 1 point. And then you have thousands of bots doing thousands of orders all the same time. When you see the super dawn that I just showed you guys, you're gonna see like orders like one, like 10,000 orders of one tick in one contract, like per second. It's crazy. And those are the bots. So when we touch the POC or the VOAP, all those bots are going to trade. All right. So that's why the price is going to give a little bounce, or either it's going to stay around the area for a few minutes, or maybe a good bounce if it is actually a good level for having a bounce. But the rule is, if you are going to trade the bounce on POC or VOAP, you got to make money on the same candle. It's not going to happen that we're going to touch the POC and then stay around the POC, and then it's going to take 5 minutes to come back. That could be happening, all right? But the trade is not like this. If we are going to have bots trading the VOAP or the POC, it's going to happen right there when we touch. So you're going to know if this trade worked right there on the same minute. So you put your order a little bit close. You don't put it right there on the line because sometimes we don't touch the line. You put the order a little bit close. When it touches the line, it has to go back. So if you have 55, 56, 57 on dealer flow, you're going to put your order on the POC, touch the order, and boom, came back. 10, 15 points, get out, right? It might be a very good reversal, or it might be a consolidation around this level. But this trade is something that either is going to work on the same minute, or probably is going to get ugly. So just get out of the trade. It's not working on the same minute. Okay. Sometimes we're going to give you guys the signal on this trade on our platform. Sometimes. But this is not 100% our setup. The trade that I just told you, the VIX divergence happens, is good. Like you have a very good level and you have VIX divergence, take the trade. And the trade that I told you guys on the VOAP or POC with balance on dealer flow, take the trade. 90% of the times you're going to make money on this trade, even though we don't have the signal on the indicator, because the signal needs more confirmations to check the signal. All right, guys. Okay. Those trades are like quick, fast trades that you can take to make 10, 15 points, get out of the trade, put money on the pocket, and you're done. Okay. Right. About the trade on the POC, VOAP with the dealer flow 55, 57, 80. You guys got it? Any questions about that? No questions? All good? Eric, what if this trade goes wrong? You're going to lose 15, 20 points. It's not the end of the day. Your business costs you 100 points a day. So it's just going to be a stop. You're going to try later in another opportunity. All right? Okay. Any other questions about that? No questions at all? Okay. Let's just take another look to the platform. So I told you guys about this guy, VIX yields flow. I told you guys what is it, the flow, and how important it is to trading special levels. And now we had here the gamma exposure history. This one is good. Like, forget about today, because today the market is not open, it's not working fine, so whatever, right? But and probably we have all the lines on the same level here. That's why we don't see all the lines, right? But what's happening is we have the biggest bar of the day, and we have bars that we could consider a target. All right. So for example, this one, 460 on triple Q, that could be a target because it is a big bar. You have good balance and it is a target, right? Price is not going to break, should not going to break this bar because here I only have calls, I don't have puts. For the price to keep moving, I need to have puts and calls. The price is not going to go up if I don't have anyone selling, right? Nobody's going to be able to buy if I don't have anybody selling. So that should be the line in the sand. The line in the sand, when we say line in the sand, we are talking about the last bar with balance in puts and calls, okay? Since we are very close to the price right here, in a regular day, I would say this is a target, and I would say this is a target. Why not this one? Because this one is the biggest when we are going down. This one would be more like the line in the sand. That would be a target, that would be a line in the sand, okay? Now, same thing that we have here. Now you have puts and calls, puts and calls. The difference between this one and this one is because this one we do the math. How would be this bar if we do the math, calls minus puts, and that would be the result. So for example, let's see here on this bar right here on the 400 and let me see this one, 461. We have 0.01 in puts, in calls, and 0.005 in puts. Do the math right here. How much would I get if I have 0.1 less minus 0.005? That would be the result on 460 would be 460, 0.28. That would be the result of this math right here if you put all the numbers. All right. So this is the result of the calculations, calls minus puts, and then gives us when we have positive gamma or negative gamma. In that case, is clear, is easier to see. Now, when we do the math, here we have positive gamma, here we have negative gamma. The place between is the flip, where we change from positive to negative, okay? For the market makers, the best scenario would be having the price all day here around the flip area, because they don't have to push the market, they don't have to hold the market, they don't have to do anything if the price stays here around the flip area. It's a very safe place for the market makers to stay, all right? Now, if you have the flip area, for example, right now, with the bottle of the implied volatility, this line right here, in this case is the flip area is on the 95 and the bottle is 305. So it's very, very close. So I believe the price would be around this level the whole day. There is no reason for the price to keep going because we are very close to the perfect point on the implied volatility, and we are very close to the flip area. So the price should not be moving a lot, especially because we're not going to have any volume today, right? So the perfect scenario would have the price all the time matching the flip area with the lowest point of the implied volatility. Some days, the lowest point of the implied volatility will match, just like this, will match the biggest bar of the day. So that makes this one a very, very good target. It's not going to happen today because we don't have any volume, all right? But the biggest bar of the day matching exactly the same point of implied volatility, man, this is a very, very good target. So looking to the charts, what I can see here, 57 is the biggest bar of the day and the lowest point of the implied volatility. So for me, this is the target of the day. Then I'm gonna take a look here, 57. 57 is this bar right here. We are above 57, right? Do we have liquidity? Makes sense? Makes sense. Now let's keep watching the lines, the historical here, if this guy is growing or growing smaller. So if it is growing like bigger, man, the price is gonna go there. Now, the flow, like we considering that we are above, okay, the flow, we have more puts than calls. It is a good moment to start selling. And VIX pointing up and yields pointing up, and it's a good moment for selling. Let me take a look here. And my trade here, I guess, where was it? Here. It didn't work. Can you see that, guys? It was the place where I had more contracts. It was the place where we had more liquidity. And I am actually really, really glad that it didn't work, because if that worked, tomorrow you guys would be doing this, right? So this is when we have liquidity. But sometimes we're going to consume all the liquidity and the price is going to keep going, right? Now, how could I see that it would be a bad thing to sell there? By the flow. If this thing was working today, we would be able to see the flow, like more calls than puts. Then it's going to be a bad thing to sell there. Okay, but I was just trying to show you guys what is liquidity and what is the flow, the difference between one and another. Flow is not liquidity. This is liquidity. Okay, this is like let's see here, 49, but like 52, but it doesn't mean anything, because you have 40 here. Like, you're gonna have a good liquidity when you have, like, in a day like this, you're gonna have 100, 120, a very, very good imbalance between the liquidity point here and the others, right? So what we have here is like a very, very low volume. Any irregular trader can put 20 contracts right there, right? So this is liquidity. And this is the flow. The flow is not about how many contracts we have there. The flow is, right now, it's better for you to buy or to sell according to the premium you're going to receive because of the intrinsic or extrinsic value on those shares. So that's why we know what's going to happen, because this is what the bank's going to do. Okay, guys, cool. So far, so good. And I think one more thing that we have to say is why the price is going to try to reach the biggest bar of the day. Now, let's see here. The biggest bar of the day is 325. Take a look at 325. We could say that 325 is a target. Now, what do we need to trade towards 325? I need more calls than puts, because I need to have sure that it is better for the banks to keep buying. I need to have VIX going down, and I need to have yields going down. It doesn't matter if I have a huge bar here, if the sentiment of the market, it's not to take a risk. The market's not going to get there. If VIX keep going down, so yeah, if VIX keep going down, there is a chance. If yields keep going down, there is a chance. But if my target is right here and the VIX keep going up, like, the market's afraid. The S&P500 investors are afraid. And if the yields are keep going up, the whole market is afraid. So we're not going to make it, period. Now, if this guy keeps going down, and you see that it is coming down, bottoms and tops, but it is coming down. If this guy keeps coming down, mean that the market's not so afraid. It's a good thing. Now I have more puts than calls, and I have the historical telling me that those bars above is growing. I'm gonna go for it. The price is gonna reach there, right? Now, I need you guys to understand why the bars are going to reach the prices are going to reach the bars. Why? Just because it is a big bar? Anyone knows why we're gonna reach the bar? Okay, so we're gonna reach the bar because those bars doesn't mean that we have a lot of orders there. It's not what it means. There would be liquidity. Sometimes we talk about liquidity, interest, and all those things, but those bars mean interest. It is about how much money we have in premium on those bars. That's what it means. When we are seeing a bar with $2 billion, that means that we are paying $2 billion in premium for someone when we reach those bars. That's the premium that's going to be paid on the market when we reach those bars. All right. Now, very, very important. I am a bank and I just bought it 5,325. And the premium on my trade for me is going to be $10 million if we reach 5,325. I know that if we reach 5,325, I'm going to make $10 million on options, because options, which is the biggest market, it's not going to pay you $1 per dollar. The real market is going to pay you $1 per dollar, right? If you are trading futures, if you are trading a spot price, if you are actually buying Nasdaq contracts, you're going to make $1 per dollar variation. Please do something with your head so I know you guys understand. Makes sense? Then you're going to tell me, Eric, but in futures, when I'm trading a mini contract, I'm making $20 per dollar, right? But in futures, you are trading 20 contracts. You are not trading one contract. One mini contract, you are actually managing 20 contracts on Nasdaq. So that's why you make $20 per point, per dollar. Okay, guys? On S&P500, you are working with 50 contracts on a mini contract. A mini contract is a basket with 50 contracts. That's why you make $50 per point. Okay? But in the end of the day, it is $1 per point. Now you are trading one micro contract, you are trading a basket with 2 contracts of Nasdaq, $2 per point. Got it? Got it. So we are talking about $1 per point. On futures, this doesn't work like this. The market can move 25 points and you actually can make $100 per point, depending on the speed that the market is going to reach the number. Okay? On options, you have to reach your target fast. If you take the whole day to reach your target, you're going to reach your target and you're not going to make money. Because on options, what you have is the option to buy or sell that contract on the expiration date. Okay? So if we got to the target very, very close to the expiration date, it's not gonna pay you anything. You're not gonna make money, you're not gonna lose money, it's just not gonna worth anything. Now, if you get to the target super fast and you still have a lot of time from the expiration, that contract is gonna make a lot of money. Options, that's why we have the Greeks, because you're going to find the premium on options is not so simple like futures. Futures is very easy. It's $1 per point, and then you're going to put together the number of contracts. You're going to know how much money you're going to make, right? On options, doesn't work like this. You have the gamma, the vana, the theta, the charm, a lot of Greeks, then when we put together, is gonna tell you how much that contract is gonna pay you in premium when we reach the price. And the time is very important. So it is possible that I have my premium on 3,200, 5,325, and I'm gonna make $10 million if I'm gonna reach there. But for me to keep buying and push the market to that price, I'm gonna spend $2 million. That's how the institutional do. So we know we're gonna go to the bar because the premium on the bar is amazing. And even if the whole institutional has to push the market to that price, and they're going to spend a lot of money to buy, and push the market there, they're going to spend $2 million to take the market there. But once the market reaches that point, they're going to make $10 million. So they are still $8 million profit. Got it? Because it's not the same. Meaning that those bars that you guys see on our charts worth something during that day, because we have a premium right now. We have a premium 5,300. That premium, the amount of premium will be paid if we got to the price during the day, because we trade 0 DTE. All the information that we have on our panels is 0 DTE. You take a note and you search for 0 DTE to get more information. 0 days to expiration. So all the premium, all the contracts, everything that we see is about 0 DTE. It is a place that we have to go today, and we have to go fast. Otherwise, it's not going to worth anything else. So when you see a big bar on 5,300 and it is 330, we are not there yet, probably we're not going to go because it doesn't worth anything else, anything anymore. All right. Now, when you have a big bar and we reach this big bar before noon, the premium was paid, everybody made money, the market already did what it was supposed to do, and that's it. We're not going to have push to anywhere else, right? So the market can come back, the market can keep going. If we have a catalyst, if we have something else happening, the market can go after the trend. But on our setup, on our strategy, once we reach the big bar, this is it. The target's done. So for example, Friday, we reached the big bar in 1 hour of the market, and we broke the big bar, and we kept going. And then when we stopped on 310, now the biggest bar became a support, right? And then we actually start bouncing on the biggest bar again. So the biggest bar of the day on the gamma charts doesn't mean that we have a liquidity there. You can understand like that, but what really means is the premium, the amount of premium that we are paying on that bar. And the institutional, the banks and everyone are going to go after the premium. They're going to push the market up to the premium. We have to reach those bars so everybody make a lot of money. All right? Okay, now when we break the biggest bar of the day, or when we break the last bar of the day, what's happening? What's happening is we push the market up to the point, all right? But the market's not stopping there because we have news or because something's happening that's on the spot price, on futures, or on what's not options, right? It is spot price or futures. They are still selling because something's happening on the market and they are selling. All right, guys? So that's how it works. They are selling. Now, market maker, they are going to try to hold the market where we have the last bar with liquidity on both sides. When we break this bar, either upside or the downside, market maker will try to hold the market at the money on the range, right? Because otherwise, market's gonna keep going down. They will have to pay the premium, and nobody's buying to generate money to pay the premium. So the market maker will have to sell with the market to generate money to pay the premium for those guys going on that direction. Okay? Makes sense to you guys? The reason that the market maker is going to accelerate the market makes sense. Listen, we have a bar. This is a bar, right? This is people buying. This is people selling. Okay? If I come to this place, I don't have to do anything as a market maker, because as a market maker, I have to give liquidity to the market, right? So this guy is going to buy from this guy. This guy is selling, this guy is buying. I don't have to do anything. But then the price comes to this place. This guy are buying. Nobody's selling. But if they are buying, who has to sell? The market maker. The market maker has to sell, right? But the market maker is going to make a sell to this guy right here, knowing that the price is going to come to another level. So everything that I'm going to sell here, I'm going to lose money when the market's going to reach this point. And guess what? When we break the line in the sand, all the bars are going to be red. And the other side, all the bars are going to be blue, because everybody here is selling. And the market maker will have to keep selling for everyone losing money. So that's why the market maker will try to hold the market here. He's not going to let the market go, because otherwise he will have to sell to everyone. And there is no place to stop. So market maker will try to hold, because otherwise he's going to be the only one selling. But what if the market maker can't hold, and the market keep going down and down and down and down and down? The market maker has to take a decision and say, you know what, we're going to have to start selling with the market. So then we are going to accelerate. That's why the market takes like the whole day to break a level. And then when we break a level, we accelerate down. We go all the way down, because the market maker has to sell with the market. All right, guys. Now, how that works? When this thing happens, we don't have the market structure anymore. The market structure is from here to here, and the price will be bouncing on those both bars. The market will be running inside this own range. That's the market structure. We have to respect the VIX, yields, the puts and calls, momentum, and the market will be bouncing around those big two bars, or the market will be stuck on the biggest bar of the day or the flip area. That's the market structure. When we break the line in the sand and the market maker cannot hold, what we have is this, like we have someone selling here for, let's say, I'm going to sell this thing for $10, right? I'm selling for $10. And then this guy is buying, this guy is only buying, that's why I have a bid, for $9.50. This guy is buying for $9.50 and I am selling for $10. So can you agree with me that if everybody is trying to buy, everybody who is selling is trying to sell expensive, $10, but everybody who is willing to buy is only going to buy on $9.50, the market's not going to move? Can you agree with me? This guy is selling at 10. I only going to sell this thing for $10, and then you're going to tell me I only going to buy this thing for $9.50. Got it? And now I have other guy here saying, you know what, man, I like my things more than you, so I just gonna sell my things for 11. And the other guy say, I just gonna buy this thing. For me, $9.50 is too expensive. I just gonna buy for 90. So this is how you're going to get the orders, just like you saw on Superdome. Okay. Market is not going to move. The market is only going to move when you are selling for 10 and I am, no, you are, yeah, you are selling your thing for 10 and I am buying, I am only willing to buy for 9.50, right? And then the market's going to move when someone feels like, you know what, man, I think this market sooner or later is going to go up. So I don't care. I'm going to buy for 10. And then boom, I bought it for 10. So this guy who was willing to sell for 9.50, he's out of the business already. And then I have another guy. So I know I'm paying more than people were asking. All right. Someone else was trying to pay 9.50, but I just gonna go there. If you know what, I don't care. I'm gonna pay 10. I just wanna have this paper right now. I'm gonna pay more. I'm gonna pay 10. That's why. That's when you are buying market price, right? You are paying what people are willing to sell. The real price, that would be 9.50. But when you enter market, you are going to buy at 10 because you are buying in any price that someone is willing to sell. Now, I bought this guy from 10. There is no one else selling for a 10. I have another guy selling for 11. And then you feel like, you know what, I think so it's going to go up, so I'm going to buy this thing for 11. I'm going to buy for 12, and then you're going to keep buying. And then is when you're going to keep consuming liquidity. You're going to buy everything that's selling by 10. You're going to buy everything that's selling for 11, 12, 13. And this is how the market's going to keep moving, right? Now, when you have a very emotional market reacting to a news, or market is like scared, they just gonna buy market, sell market, buy market, sell market. And this is how the markets keep going. It's gonna accelerate, go crazy, because we don't have the market working like it was supposed anymore. Like the fight, oh, I'm gonna buy a 10, but I'm gonna sell, or I'm gonna sell a 10, but I'm gonna buy a 9.50. The price will, no. Everybody thinks the market is gonna go up, so everybody's buying market price, because otherwise you're gonna lose the opportunity. And that's why the market accelerates, because everybody's buying market. Even the market makers are going to buy market. And there is no way for us to see that. In the platform that we have the liquidity, like it's a better platform that we can see the liquidity, we don't see 5,000 contracts, 1,000 contracts. We don't see that. We just see like contracts entering, exiting, like being negotiated all the time. We don't see the big numbers. We don't see the liquidity. There is no liquidity on the market. The whole market's working by aggression. Like everybody, oh, I'm buying. That's how that happens. So we don't see on the bars, because we already broke the line in the sand. We don't see on liquidity. We don't see anything. So we pretty much don't know when the market's going to stop. We can't see where the market's going to stop, right? That's why we don't trade. When we break the line in the sand, we don't trade. What you can do, if we break the line in the sand, if take a look on the flow. If on the flow you have 80% buying or 80% selling, you can try to do some trades, quick trades, and take some profit as the market's going down. All right. If we break the line in the sand, the market's going down without liquidity, without any reason. It's totally out of the market structure. But you can see that the flow is 80% puts. VIX is going up, yields are going up, man, you go with the market, you sell and protect your trades, right? So you never know when it's going to stop. But when you see 80% puts or 80% calls, you have the information that it's still more advantage for everybody to keep buying, or it's still more advantage for everybody to keep selling. All right, guys? Make sense? So, taking a look on the platform again. I told you guys about VIX, and I told you guys what is it, why we have it, and the VIX divergence. I told you guys about yields, what is it, and that's the macro economy, and this is only SP500. We already know about the levels. I told you guys about the trade on the POC or VOAP. I told you guys what is the flip area and the volatility line here that always calls the price. If you have the volatility with the biggest bar, is a very good target. I told you guys about the flow is a very, very special indicator. And I told you guys how to read the biggest bars and what it is the biggest bars. Is the premium, is where the institutional are going to make more money. And then how to read the story, the history here, and check your trades around this thing. Told you guys about everything. The only thing that's missing is the scale of deviation. Scale of deviation is also a proprietary indicator that we did, that there is only one way for you to read this thing, okay? The red line is the most important line. You gotta see the red line below 100 to be sure that the market's going up. If this red line is close to 0, it's even better, like we're gonna skyrocket, right? And if you have the line above 1,000 or 800, I guess, 800, 1,000 is markets down. So take a look on those numbers. Below 200 and around 0, market is going strong up. Above 800 and 1,000, markets going strong down. That's the red line. And then you have the confirmation when you have a distance between the red line and the blue line. If you have this thing like a crossing all the time, we still don't have a direction. So we could say that we are bullish when we are below 200 and this guy is far. And we could say we are bearish when we are above 800 and this other guy is far. That's how you read the scale of deviation. All right. If they are crossing the market, probably sideways, we don't have a direction yet. Okay. Good thing about those. I guess that's it, guys. Now I'm gonna answer your questions. If you have a question about anything, let me know. Robert, go ahead. I can't hear you. Unmute, and you are still muted. There you go.
All right. What happened to my indicator?
I'm sorry?
Sorry, I still up. Oh, so when I'm looking at the gamma exposure history, and we're looking at SPX, and I see the green bars at 50, 53.25. I know where that is on the SPX candlestick. But if I switch to triple Q and it says 430, or I don't know where that is. So how does that correlate with the candlesticks on the SPX candlesticks or the NDX candlestick? There's no 460, so I don't know. You might say, oh, there's going to be a bounce at 460. Well, I have no idea where that is on, and how that.
I got it. The SPX is good because the number is the same, but triple Q and NDX is very different. That's what I'm saying, right?
Right.
Okay,
right.
So we are. The problem is we also have this candle, the bars for NDX. You also gonna be able to see all the bars for NDX, but NDX, which is the real thing, we don't have that much volume. Like the bars are not good. It's not going to help you in anything, NDX. The volume on options to trade in Nasdaq is triple Q. Triple Q is just an ETF from Nasdaq, but it's where we have the whole volume. So we have to take a look at the bars on triple Q to see where the market's going to go, right? So Right now, you can only see like a one level above, two levels above, like something like that. But we are developing a calculator that you're going to be able to put the triple Q number and it's going to give you the NDX level on triple Q. We are developing this the calculator to put there. Right now, you can only like each number on each level on triple Q would be a volatility line on NDX, almost a volatility line on NDX.
Okay.
Okay. That's the best we can do. The way that I do right now,
Sure.
I
Okay.
open the trading view. I have triple Q on trading view and I match the levels. Okay, that's
Oh,
it. Because yeah, you
right.
can open triple Q, for example. This is like a some of you guys don't have the trading view. I have it, so sometimes I look like this. Let me
I
open right
do.
here.
I do have trading.
Triple Q, for example. Let's say this guy right here. Let me just hide this thing. Okay, so this is Nasdaq. This is NEQ, right? What I can do here, if you have trading view, you can come here to like a, let's just put NDX. Oh, NDX. Oh, okay, this is NDX, right? Then you can click the plus sign and you can select triple Q and select new price scale, right? Then you're gonna have triple Q and SPX on the same scale. So you know that 558 is the same that 8,800 and something. So if you know that triple Q here, triple Q 459, that would be 8,860 on NDX. Got it? This is something that you can do. If you have trading
Okay.
view, it's going to help you for now. But later we're
Okay.
going to have the calculators for you guys to use. Okay?
Got it. All right. Cool. Yeah, it makes sense.
Okay, guys,
I
cool.
just want to make sure I wasn't missing something when I was reading the charts. But I get it now. Thank you.
And you know what? It would be easier for us just to remove NDX and put the triple Q there because we are trading the candles. We are not trading the price. You're not going to have the same price on futures anyway, right? So we are pretty much trading the candles. The only reason that we don't have triple Q there, it's because right now we are not able to receive second by second the market data. The triple Q, we only receive minute by minute. And if I have a candlestick minute by minute, you know, sometimes we have like 20 points in 1 minute. So you're going to miss a few trades. So it has to be second by second. And it's impossible to get for triple Q right now. But if we get it later, probably we're going to change NDX for triple Q because in the end of the day, triple Q is the one that we are following, right? Okay. Anyone else has a question? No questions? All good? Either I did very bad or very good. I don't know. Because, like, come on, guys. Well, listen, we're going to have market tomorrow, Tuesday. I'm going to be on the live trading room with you guys Tuesday. Wednesday is going to be the live trading room in Portuguese. I'm sorry, guys, but I gotta take care of the Brazilians as well. And you're gonna say, yeah, but the Americans. Guys, believe me, we have half and half on the platform right now. The same amount I have Americans, I have Brazilians. And I would also do a live trading in Spanish if I were capable to speak Spanish, but I'm not. And I only capable to speak two languages, probably just one and a half. So Wednesday, I'm gonna do in Portuguese. Every single Wednesday, I'm gonna do in Portuguese. And all the other days, I'm gonna do in English. This Friday, I'm not gonna be doing anything. This Friday, I'm not gonna be trading actually, right? This Friday, I'm gonna be out of the computer because I'm gonna be traveling to the beach with the family. And I'm not working Friday. So you're not gonna see me on Friday. You're gonna see me every single day, but Friday. Friday, I'm not there. All right. So you figure it out. You just had like 2 or 3 hours a good coaching on the platform. You figure it out. You can't do, that's all right. Follow the aggressive signals. All right. Now, let me tell you something about the aggressive signals. Something very, very good about the aggressive signals. Now, I know you guys are doing something else, but pay attention on this one because this one is good. The aggressive signals, let me put back to NDX. NDX. Okay, let me delete this guy. And we have here a back test for the aggressive signals. All right. So we're going to turn this thing on. And let's see how much money we are making on the aggressive signals. So properties, we're going to do 20 on NDX is the same thing that one on futures. Inputs, this would be about 1,600 and this would be about 800. Okay, that would be the back testing for the aggressive signals. But you're gonna say, Eric, but we don't have all that much aggressive signals. Yes, because this is the system that we are using, but that would be without the filters. Filters, because with the filters we are using, we are reducing this thing. We are being able to cut like 80% of the bad signals, right? So believe me, for example, here sometimes you are buying with the VIX going up, and that the signal is going to go bad because you only have 13% profitable. Something's wrong, right? Let me fix it here. That's right. 800. Let me see now. Yeah, more likely 1,000, I guess. Oh no, there has to be the same number here. 160, I guess. No, 1,000. Okay, so here you have 50%, around 50% good signals. The way that we are doing, we use this trigger that we developed, but we try to filter the bad signals. So in the end of the day, those numbers are going to be much better. But this is the strategy that we are using. And if we go to the back testing, the long back testing on this guy, let's see what we can get. But I'm not done. Let me explain exactly what I mean here. Come on. Taking forever to do the back testing, probably is because 20,000 trades along those past 4 years. Thank you for your patience. You guys are traders, so you have a lot of patience, I know. Come on. You know what? Sometimes the trading view just stop working and I have to restart my whole computer. Let's hope this is not the case. Well, anyways, what's going to happen here is we're going to get something around $1 million in 40 years trading this system. Okay. It was pretty much the same number that we were getting with the old momentum. But the thing is, let's just cut this long back test and let's do the since March 12, 2024, right? Since March 12, 2024, we have 1,000 trades, $80,000 in profit. All right, March 12. Okay, cool. But this is not what matters. The problem is when we were doing this kind of back testing, we were never able to be really, really profitable on NQ, because NQ, as you guys know, is faster. We have big tails on the candles, and it changed all the results. So now if we go here for NQ, let me just reload. Oh, let me just reload. If we go for NQ, let's hope TradingView don't break.
Olha o WhatsApp aí, ô Eric.
Very good, very good. Yeah, it broke. That's my TradingView breaking. But doesn't matter. If we are going to NQ, the only thing that I can do is to share with you what the analyst is telling me, because he knows I can't show the trading view for you guys. So I'm just gonna share what the analyst is telling me. Where is it? Share, boom, share. Okay. So he's telling me on NQ, the past 290 trades, we had 172 good
Mr.
trades.
You're showing your WhatsApp window.
Yeah, I know. This is what the analyst is telling me. I want to show, because I can't get the back test on trading view, and he's telling me the result. 290 trades good, trades, 172 good, 37 bad, 82% profitable. That's the new system that we are using for aggressive. But for aggressive is that trigger with the filter that we are using, all right? And you guys saw that we changed a lot of the results when we went back to NDX, Nasdaq, instead of SPX, right? What makes us decide to change is we got all the past 100 trades that we did. You guys have the back test there. The time we took the trade and the time we stopped the trade. All the past 100 trades that we did, we would be making 2 times more money if the same trade was on NDX. So, and why is that? Because NDX moves faster, and you have more time to put the break even, and you have more chance to exit with some money before the prices come down. SPX, man, it's a hell to get this thing moving 1 point, right? And we have to put the break even with 2 points. And sometimes the whole market changes before we reach 2 points. And NDX doesn't happen like that. So NDX is way bigger, and it's way better for us to do scalping. All right. So that's why we change for NDX. Now, as you guys can see on the new system that we are using, I'm not going to be able to show you guys anymore because now I will have to restart the computer. We are very, very profitable on NDX, but also in NQ, which we have faster candles and bigger tails. All right. So we are very, very confident that this fine tune that we did on normal maintenance strategy is going to make a huge difference for us. Right now, I know some of you guys are going to say, Eric, what the fuck? You change a lot all the time. What's going on with you? Guess what? If you are trading, that's actually a quality, because the markets are changing all the time. What worked last year is not going to work this year. So we have a huge team, a lot of people working with us. We have real analysts, real programmers working in a way that we figured out what's happening right now, the volatility of the market right now, and what the market's actually responding right now, what's going to be the news, who actually is going to move the market, and a lot of things. So we have to tune our strategy all the time. So a few months ago, we understood that SPX would be better because Nasdaq was too crazy and it was too hard to read. SPX was better. And then we did very good days on SPX. Right now, the market's reaching the balance again, and NDX is better than SPX. And the new momentum that we are working, the new trigger, is way better as well because we are tuning every single day. Guys, when I close the room like 11:30 and I stop trading, like when I tell you guys I stop trading with 50, 40, $100, doesn't matter. And then we spent all afternoon working to improve the system. Every time that we take a stop, we start working on why we took that stop. What happened? How come we didn't saw what was happening on that stop? We are trying to fix this indicator every single day with more and more and more information, learning every day with everything that happens. Every day we have a different scenario uh, on the market. So every day we have to learn with our stops, right, guys? And that's it. That's why we are not changing, but we are adjusting, we are tuning our indicator in our system every day. So for example, it's an amazing thing. We already had an amazing indicator, but it was a very good investment and a very good thing to create the dealer directional flow. The dealer directional flow is a new indicator that actually is killing. It's a great information, right? And only this indicator worth more than $200 a month. Only this indicator because it's going to give you the information to trade the VWAP, the POC, or if the movement's going to continue or not. If we broke the line in the sand, how do you know if you can sell, right? This indicator is going to tell you. So that's why we are always developing and improving and making better and better and better. And now you guys know that we have the VIX, the yields, the dealer flow, the dealer directional flow, the gamma bars with history, and the special levels on the charts of Nasdaq and SPX. That's much more information than you need to trading. But we also have the aggressive, the moderate, and the extreme. Let's talk about that. Extreme is 100% automated signals. There is no filter, right? If we have the scenario to buy, the signal are going to buy. We have the scenario to sell, the signal is going to sell. The extreme is never looking to VIX, yields, or flow. So in order for you to follow the extreme, take a look at what VIX is doing, yields are doing, and the flow, right? This is what you have to put together to decide if you are going to take the extreme or not. So it is a good signal, but we still need to filter with the information on momentum information, VIX, yields, and flow. That's the extreme. It's up to you. We don't give you exit on this one because this one's pretty much going to give you the time to take the trade, and you're going to exit the trade when you have good money, you protect your trades. It's up to you. One thing is you don't have to get crazy with those trades because you're going to have opportunities the whole day on the system. You lost money, that's it. Okay, cool. Aggressive. Aggressive is this trigger that I just showed you guys. It is like the same trigger that we started back in October. It is the momentum system with a lot of information. We put together a lot of information, but we are just like improving. So it is the same trigger, okay? Aggressive, you don't have to filter anything. Just take the trade, okay? But how the trade is going to work on aggressive? Let me share my screen with you so you guys have a better idea on the stops. Okay, so let's say on aggressive, I take the trade, I took, for example, a buy signal on aggressive right here when we have the VIX divergence. I told you guys about the VIX divergence, it was right here. And we took a buy signal right here in the end of this candle right here. All right.
You're not showing your screen.
I'm not sharing my screen. Fuck. There you go. Now you guys can see my screen, right? Okay, sorry about that. So let's say we took the trade right here when we had the VIX divergence, and then we had this big candle going up. It was a good level to trade. We took the trade right here, the buy. Where we're gonna put the stop? The stop will be below the pivot right here, the swing. Some people like to say pivot or pivot or pivot, I don't know. But in trade we call the swing, okay, the lowest swing. So the stop will be here. We are not talking about 5 points, 10 points, 20 points stop. It doesn't make sense. If you put 5 points stop and the stop is here, man, huge chance to be stopped. Like, it doesn't make sense. The stop has to be below the lowest swing. If I take a buy signal, let's say right here, for example, the stop will be around this area, the lowest swing, right? If I take the buy signal right here, the stop would be around here. I don't know if this is the analyst here would tell us, right? So as you guys can see, it came a lot that would be stopping us right here. But if the stop was actually on the lowest swing, it would not stop us. And then that would be a great trade, right? So they stop. We don't have a number to put the stop. I can't tell you we're going to put the stop 5 points or 20 points. I can't tell you. The stop will be technical, will be always below or above the lowest swing or the highest swing. That's when we're going to have the stop. Aggressive, you take the trade, you don't need any filters, and you know that the stop will be above or below the lowest or the highest swing, and that's it. Aggressive, it's more indicated if you are going to trade prop firms, because you can't deal with the trading drawdown, all right? So if we make some money, we're going to protect our profits, right? And then if this thing keeps going, that's great. When we see that we are losing strength, we're going to close the operation and put the money on our pocket, all right? It does, like you guys were trading with me last week. You guys saw how many good trades we took, and we left a lot of money on the table because we exit on the protection. Like, I'm talking about a lot of money that we leave it on the table because we protect our trades, right? But this is it. This is the rule for aggressive. Some trades put us out on break even and went all the way on our favor. Some trades we exit with 10, 15 points, and then it went another 100 points. It's okay. It's part of the game. This is how we have to trade, because we are trading with a trading drawdown. Okay? So aggressive is going to be a system that's going to take care of your trading drawdown. You're going to be pissed because you're going to leave money on the table, but we're going to be taking care of your trading drawdown. Moderate is going to be exactly the same trade. We're going to take the trades on exactly the same spot, but moderate is all or nothing. It's more indicated if you are going to trade your own money. The stop will be also on the lowest swing or highest swing, right? But moderate, we're going to go for the target always. Either this thing is going to pay the target, or is going to break even, or is going to stop. Moderate, we're going to go for all or nothing. So probably on moderate, we're going to have, like in 10 trades, we're going to have 2 stops, 4 break evens, and then another 4 winners, but each winner will be 50, 100 points. Okay, guys, that's going to be moderate. Moderate, we're going to hold. It's going to be all or nothing. Make sense to you guys? Aggressive is more for prop firms that we have to take care about the trading drawdown. Moderate, it is if you are trading your own money, so you can hold the trades a little longer. So it's going to be all or nothing. All right, but it's going to be pretty much the same trades. Extreme, a lot of trades, you have to filter yourself. Aggressive, less trades, you don't have to filter, and we're going to put the money on the pocket. Moderate, same number of trades on aggressive, but it's going to be all or nothing always. Either it's going to be the target, or it's going to be a break even, or worst case scenario, stop. That's the rules for extreme, moderate, and aggressive. Okay, guys, cool? Cool. Now, before we go, let's talk about the bots, because that's why we changed the rules for moderate and aggressive and everything. Probably by the end of this week, we're going to be releasing the bots. We still need 1 or 2 more confirmations that we're going to be able to do it, but I think we will, and we're going to release the bots by the end of this week. Now, we're going to have 3 bots for you guys. Just a second, John, I'd like to ask. Don't forget the question. First bot will be a full automated bot for MetaTrader 5. So doesn't matter in which broker you have your account. If you are trading on MetaTrader 5, you're going to be able to connect a full automated bot for MetaTrader 5. It's going to check the trade. It's going to exit the trade. MetaTrader 5. You're going to have the second bot, which will be a full automated bot for tradovate. It's going to check the trade, it's going to break even, it's going to exit the trade, it's going to be all the job for you, right? The full automated bot for tradovate. Those 2 bots that I just told you guys is for trading your own money, okay? For MetaTrader that I recommend for XE and in tradovate, okay? And the third bot is not going to be a bot. It's going to be a trading assistant. It's just going to check the trade. That's going to be the bot for Apex account or prop firms account, because you are not allowed to use a full automated bot on prop firms. You gotta use a bot, a trader assistant. It's just gonna check the trade for you, so you don't waste the trade. You don't have the time of reaction, slippage, and all those things. When we have the signal, the bot will be trading for you, right? Then you have to be there watching the screen. When we check the trade, it's up to you to stop, take profits, or do whatever you're going to do to close the trade. All right. So 2 bots to trade your own money, one in MetaTrader and another one on tradovate. And the other one will not be a bot. It will be a trader assistant, which is pretty much a bot. But we're going to call trader assistant because this is what Apex allows us. It's going to check the trade, and it's up to you to close the trade. You guys understand that? Okay, probably this whole thing will be available on your dashboard by the end of this week. Now, I was talking about that on Friday, and we decided to not charge for the bots. We are not going to sell you guys the bot. We're just going to include the bot on your plan. So if you have Quantico Cap, you are paying $200 a month. You have access to the signals, the buy and sell, extreme, moderate. You have access to the live trading room, to the indicators, to the best system to trade in Nasdaq, but you also going to have access to the bots. So it's up to you if you are going to be in the screen all the time, or you're going to connect a bot and whatever. But if you are trading Apex, you have to be there trading. The bot is going to check the trade. It's up to you to close the trades, right? And this thing that we are doing for Apex is going to be very, very special because it's going to check the trades in all your accounts. Most of the bots that you can see for prop firms is going to be a bot to trade one account. The one that we are developing is going to be able to trade all your accounts on the same time. All right. So I'm gonna release the bot by the end of this week, and we are going to explain, do tutorials and everything for you guys. All right. So that's going to be a very, very, very good thing for you to use the bot if you are missing the time. You know, I don't understand exactly when, but man, connect the bot and go for the bot. Now, What we are trying to do here, guys, please pay attention on this and tell me if I am wrong, but this is my heart. This is what I'm trying to do here. I'm trying to create the best business opportunity for you guys ever. If you put together Quantico Cap with everything that you need to learn about the markets, the best way to trade, which is together with the market makers, understanding why you are buying and selling. You have a very fast and accurate indicators to check your trade, but you also have an automated system to buy and sell. And you can actually connect the system to a prop firm, which you are not going to be risking your money. Guys, we are just building a money machine right here. Like anyone with 2 months, if you have $400 to pay Quantico Cap for 2 months, and you have another, I don't know, $400 to invest in a few accounts on Apex, guys, you have a money make machine. If you have $1,000 to start, you in discipline, you have a money make machine. Come on, like look at his face. He's just withdraw money on Apex. Look at the happy face. I am withdrawing money. All is withdrawing money. I know other people who are withdrawing money because they are very disciplined, right? Now, always, my friend is a very good friend. So I'm going to take the liberty to tell you guys his story. He started trading. He fall in love with trading, and then he decided to go Vida Loca. And he traded Vida Loca for, I don't know, 6 months. And I guess he broke, I don't know, 500 accounts on Apex. I don't know, right? So, man, Vida Loca, Vida Loca. And then one day we were having lunch, and I said, man, the best way to do is slow micro contracts, buy many accounts, blah, 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 blah. And then he didn't believe me. He kept trading Vida Loca. But one day he decided to change. Now he's trading the way that he's supposed to trade. He actually takes the trade with the indicator, but he also takes his own trades because he's with us since the beginning, since the first day. So he knows how to read the whole thing. So he traded with us, but he's trading his own trades. He makes like, I don't know, $300, $350. He stop. And that's it. Turn off the computer and go do something else. And he is withdrawing money finally. All right, guys. But in the past, while always sharing, oh, I made $1,000 in each account, right? So the same way that you make $1,000, you can also lose $1,000, and then you're going to break the account. Discipline, go small and always. Guys, this little thing change everything. It's not about Quantico Cap. It's not about the system. It's not about aggressive moderate. It's not about that. It's about the discipline to trade small and stop when you have like when you feel like, okay, I'm done for the day. I'm good. I'm not going to expose my earnings to the market again. I'm done. All right. Then you're going to be able to withdraw money. Now, man, if you have $1,000 to pay for Quantico Cap and to pay for your prop firm, you have the discipline, you have a money make machine. And that's it. Like, you're gonna make money. I'm here to tell you guys because I'm making money. I withdraw money this week again. Oh, just withdraw money. And here on the group we have Matt. Matt is working with Apex. And we have our deal, me and Matt, like Quantico Cap and Matt, and he's he's helping us with everything that we need. So if you guys have any problem with Apex, like real problems, don't like if you have questions, go to the website and take a look on the help desk. But if you are having problems, you can call Matt on the Discord. He's gonna help you guys. But this is working. Those guys are paying. Like, if you make money, those guys are going to pay the money you are making because this is what they want to do. They want to find good traders where they can actually put some money and make money with you. So they are doing their thing. And for us, it's the best opportunity of all times. Just go for it with discipline. Now, if you don't have $1,000 to actually keep going, probably is not the right moment for you to get involved on this thing, because it's gonna cost you money. Quantico Cap is gonna cost you some money. Apex is gonna cost you some money. Like if you don't have $2,000, don't buy 20 accounts, because when you get approved, you will have to pay $2,000 for those accounts, right? So keep small. Like if you have $1,000, start with 5 accounts. When you get approved, you're gonna pay $500 for those accounts. Then you're gonna pay for Quantico Cap. You're gonna make money. You're gonna withdraw your money and keep going, keep going, keep going. With a $25,000 account, if you follow the system, I'm telling you, you're gonna be able to withdraw at least $500 a month in a $25,000 account. At least $500. 500 is too low for you. Get 10 accounts. It's up to you, right? So keep going, believe the system, discipline, you're going to be able to make money. Now, when you go to Facebook, when you go to Discord, and we're going to go to other groups, you will see people making $5,000 a day, $2,000 a day, $1,000 in each of 20 accounts. You're going to see big numbers, guys. And that's like forget it. Anyone has their own tolerance to risk. And then, you're going to see a lot of people sharing $20,000 a day. And then tomorrow they're going to break the account, right? So like, forget it. You have your own rhythm. You have your own way. You have your own system. And it doesn't matter if you only make 30 points a day on Nasdaq. It doesn't matter if you only make 20 points a day on Nasdaq or 50 points a day on Nasdaq, which is my goal, right? It doesn't matter if other people are making 1,000 points a day on Nasdaq. Like, I don't care. Like, that's their way to trade. And when they gonna lose money, they're gonna lose big. So I'm not gonna break my accounts. I'm gonna go slow and always, slow and always, and slow and always, and I will be able to make money, and that's okay, right? I have my own rhythm, and I have my own system. It is 1 month to get approved, and 1 month to be able to do the first withdrawal, and I'm just gonna keep like that. Now, before you guys feel like, oh, I'm not doing right, I also gonna share my screen with you again, because I wanna share this. This is my Apex account. This is 10 accounts that I'm trying to approve right now, okay? First day, it was a bad day. I made $0. I broke even on that day. Remember, my business cost is $200 a day. So first day, that's all right. I made $0. Second day, it was a bad day. I was able to almost break even because I started the day with a few stops and I finished the day with $10. Third day, I made $34 in each account. It's ridiculous, but man, the market was not good to trade. Fourth day, I made $92 per account. And here I made 42, right? So it's small and always, it's small and always, and small and always. I'm trading this account for 5 days now. I'm gonna have the 5 days, and I only made 158. It was a bad day, a not so good, a good day, and a not so good. I made $158 in each one of those accounts right here. All right, guys. But it doesn't matter because I'm moving forward. Okay, I'm moving forward. And those accounts is actually the $100,000 is static. So I have to start really small. So I start with 1 micro. My project here is to trade those accounts up to $500 profit. Once I get $500 profit, I'm going to start trading with 2 micros, and then probably going to be go faster. And then once I get another $1,000, I will be trading with 3 micros. So I really believe I'm going to make $2,000 on those accounts in 1 month, 20 days trading. $2,000, I'm going to approve. Then I'm going to buy the accounts, and then I'm going to start all over again, but now with real money. $500 with 1 micro, another $500 with 2 micro, and then once I have 1,000 something, I'm going to start trading with 3 micros and keep going. All right, guys. And I will be able to withdraw when I have enough money there. The one thing that I like on the $1,000 account instead of the 25 is on the 25, let's say you got approved, and then you're going to be able to withdraw when you have 26,600. You make $1,600. You're going to be able to withdraw when you have 26,600. If you withdraw $500 on this account, you're going to receive your money, but you're going to hurt your drawdown a little bit. So if you are 26,600, your drawdown right now is probably around 1,500, right? You withdraw 500, your drawdown will be 1,000 now. You're still going to be positive on your account. You're still going to make money on your account, but your trading drawdown now is $1,000 behind you. Make sense? You guys understand that? If you have a $100,000 static account and you make 2,100, then you're going to be able to withdraw. Now, your stop, it doesn't come with you. Your stop is on the 99,400. If I withdraw 1,000 here of my $2,000 that I just made, my stop will be there on the same place, 99,400, right? So it's better because sometimes you have bad moments that the account's gonna go behind. For example, to be honest with you guys, and that's very, very important because a lot of you guys makes this mistake here. I was sharing with you guys the accounts that I'm approving right now, right? But let me share with you my real accounts. That's a nightmare, right? Those past few days, because I was doing good, making money. Every day I was making good money, almost $200 in each account. Good money. And then boom, bad day. Really, really bad day. And this day, it was the day that actually I withdraw some money. I was teaching some people some stuff, and I had the mini contracts on the screen. And then I took a trade with mini contracts instead of micro contracts. And the moment I took the trade, it went against me, and I tried to fix it. And it was a day that I did everything wrong. So it was a mistake followed by other mistakes. I lost $500 on this day, right? All right. Then I but I stopped trading. I felt like, oh, man, I have to stop right now because otherwise I'm going to break those accounts, and I can't afford to break an account now. Next day, I made money. And then I was almost recovering the whole thing. And then another bad day, losing $243 in each account. Bad day, last 31, bad day. Good day, bad day, last 102. Good day, bad day, good day, bad day, very bad day. Now those two bad days right here. Bad day, good, not so bad, and good day, and back on track. Now, as you guys can see, during a month, I had a lot of bad days, but I didn't break the account because I stopped trading. Next day, let's do it again. Stop traded. What do? Change the method, change the whole thing? No, man. It's just like 2 days that the market wasn't behaving the way it was supposed to behave, and then keep going, all right? But I still have money on those accounts. I still have money. Even like with a huge stops right here, I still have money. I'm still going. And the next month, I will be able to withdraw money on those accounts. All right, guys? So what I'm trying to show you guys here is good day. One bad day, you can't break your account because you are having a bad day. Stop trading. Next day will be better. Sometimes not. You had a bad day here. Stop trading. Next day, bad day again. Stop trading. Don't break your account. Only on those 2 days, I almost lost $1,000 in 2 days. Just stop trading. Keep your account alive so you can keep going. So what I'm showing here is not every single day is good. You're gonna have stops, you're gonna have bad days. Don't break your account. Just keep going, keep going, keep going. A lot of you guys trading Apex, when you have a bad day, you go for all or nothing. Oh, I don't want to close on red. I don't want to have this $500 stop. I'm gonna try to save this account today no matter what. And then you're going to break the account, and then you're going to have to go to evaluation again, and then you have to approve those accounts again, and then you're going to have to start from scratch again. So don't quit your account because you had a bad day. Keep trading. Bad day, stop trading. Stop trading, right? And then you keep going. And by the way, the rule of the 200, I just decided to keep. My rule was 500, but then 500, if you are losing 1, 2, like it's too much, like the day is not working, you had a lot of opportunities, just stop trading with 200. That would be better for me. So now I am adopting the 200 as the cost of my business per day. I'm not going to lose more than 200 a day. All right. And that for me, that would be, this rule for me right now would mean almost another $600 on my account right now. Okay. Because you know what? I don't remember one day that I was losing 200 and I was able to bring it back. I don't remember. If you are taking stops, it is because the market's not behaving on the structure. Something's wrong. Then you are just trying to guess. Stop trading, right? I don't remember any day that I was losing $200 per account and I was able to bring back. So 200 now is my stop point. If I lose $200, it's because the market's not on their right structure, and I'm talking about 100 points. I'm talking about 1 micro. Okay, so the market's not working. Today is not a good day. I just gonna leave and come back tomorrow because probably it's gonna be better. All right, that's how I'm gonna do it right now. This is it, guys. Tell me, John, you had a question. If you still remember.
Yeah, of course, but I think that with the third vote, that will be the solution for, because actually I want to ask you, what is the best practice in order to access when we saw the signal? Because actually it takes different times in points. For example, I see in some point the signal appear. So meanwhile, I can try to access, it takes 1 or 2 points to move. So what is the best practice? Because for example, in my case, when the signal, when the indicator said, okay, stop and get the profit, exit, I continue with some loss, for example. So I need to wait 2 more points, 1 or 3 points.
Take action exactly on the moment that you see the signal, right?
Okay.
You might be having a little delay.
Exactly.
Because you are in another country.
Hmm.
You might be having a little delay because you are in another country. Right?
Okay.
But the bot is gonna be very, very good for you to check the trade. Actually, the bot is gonna check the trade before the signal shows on screen. But to exit the trade is still gonna be up to you.
Okay. That's it. No more.
All right, guys. But if you are still having some delay or something, if you feel like the delay is too big for you, let me know on Discord and tell me where you are. If you feel like the delay is too big. If you feel that you have a delay, but it's not a big deal, you can still tell me just for me to know what's happening. But I'm telling you, if you are outside the United States, you might be having a delay. Okay? All right? Now, if you are in Europe and you are having a delay, let me know. And then we're going to see how many users we have in Europe. And then we're going to consider inputting 1 server in Europe. This is what happened in Brazil. We were having a lot of delay in Brazil. But since we have a lot of users in Brazil, the past few days, we just installed a couple of servers in Brazil. Now we don't have delays anymore. So, but we have a lot of users in Brazil. Now, if you are in Europe and you are having a big delay, let me know on Discord. For me, send a message for me. We don't want to create a whole riot there, right? So send a message for me and tell me, because when I am live, you're going to see when I have the signal, and then you're going to see when you have the signal. Eric, on the live, the signal was like 2 seconds before. You let me know. If the signal you have on your computer is like 2 seconds after the signal I have on my computer when you are watching the live. Okay? And then we can work with the delay if we have a delay. All right? Anyone else? Any other questions? Dimitrios, tell me.
Hello, Eric. Hello.
Amen.
I have a question. Later, I want to say before something. Man, big thanks for all what you do for us here.
I'm glad.
6 months before, I think I thought trading are not for stupid guys. And I changed my mind, and your system helped me a lot to, I have 3-4 live accounts. I passed I growing slow, I trade a little conservative at the moment, until the moment that I'm feeling better and to make the trades. But now we have to follow the system on aggressive, and okay, I will try to do it this week a little better. And my question is about the VWAP. I see you sometimes after the opening or before the opening, you make a trade to the VWAP. Can you explain a little about?
If we are going to the VWAP,
yeah,
and you have, like, for example, we are above the VWAP.
Yeah.
We are going to the VWAP, and you have a little bit more puts than calls, take the trade. We're gonna touch the VWAP.
Only this thing, yeah.
Yeah. Just keep watching the puts and calls, right?
And before the opening, we have the put and calls. We have the information.
Oh, sorry, you are talking before the opening. No, I'm talking about after the opening.
After the opening, how many minutes we have the put and calls there? How many minutes about after the opening?
After the opening, I guess like 1 or 2 minutes later, we already have the puts and calls.
Okay,
right?
kind of better decision.
Before the opening, you don't have the puts and calls, right?
Yeah.
Maybe it's there, but like the number is not correct. The only is going to be correct before the opening. Now, remember, before the opening, I'm talking about after 7 a.m. on Eastern time. If you let the price go a little bit far from the VWAP, after 7, let's say after 7, if the price is far from the VWAP, probably is going to come back to the VWAP before the opening, right?
Yeah.
The days that the price is far from the VWAP and it doesn't come back to the VWAP until the opening time, it's going to be at that day that we're going to keep moving forever, right? It's going to be a very directional day. But I can tell you guys, 85% of the days, we're going to come back to the VWAP before the day opening, all right? Some days we're going to be around on the VWAP since 8 a.m. and we're going to be around, bouncing around the VWAP. You don't have an opportunity to trade. If it is 7:38, you are far from the VWAP and you see that's coming towards the VWAP, you might take a risk to trade towards the VWAP. But like this is a guess. We don't have anything to support this direction before the market open. All right, it's just like a guess. Most of the time is we're gonna come back to the VWAP before the market open, but it's just a guess.
Yeah, sometimes before the market open, the pre-market, let's say at 8 o'clock, 8 after midnight, 8 after midnight. I took on the evil account some trades when they go, when I don't see the yields are going up or down or anything, it's neutral. I take a trade on one, because I'm buying one evil account and try to pass again. I'm one, and next one, and next one. I don't feel comfortable to make 5 accounts and pass and pass. Okay? But it works sometimes when it's not or neutral, and the go to the view up before the open. That's my
Okay.
I lose my words. Okay.
But that's all right, man. I got you. But listen, it is still a guess. You can use yields and VIX to give you some support, right? But it's still a guess. Okay. I was doing that, but I quit doing that because, man, you know, the best thing to do is to trade with the indicators, the bars, the VIX, the yields, the flow. Like, try to use everything that you have there. And you don't want to do that, follow the aggressive signal. Listen, you guys should be learning how to read the indicator and should be learning to take your own trades. But the safest place is to trade the aggressive signal. You are not going to break if you trade the aggressive signal. You will be approved and you will be able to withdraw money if you trade the aggressive signal, because the aggressive signal has a team of analysts managing the thing to make sure that you're going to be able to make money on the system. All right?
Okay, thank you, Eric. Thank you.
No problem, my friend. Any other questions, guys? Javier.
Hi, Eric. I don't know, maybe you touched this before because I just came here very late. But I have a question about the bot. Will the bot will be working with the NinjaTrader system?
Man, if you trade NinjaTrader web version, I guess it will be working. Listen, the bot will be made for tradovate. Later, we can develop the same thing. Like 1 week later, we can develop the same thing for NinjaTrader and for other platforms. We're gonna launch for NinjaTrader for the tradovate. Now, later we will be able to do with other platforms, but you have to be trading on web version. Okay. NinjaTrader has the app and has the web. You have to be trading the web.
Okay.
Right?
So it will work since the beginning in NinjaTrader?
No. We're gonna launch on tradovate. Maybe one week later we can launch for NinjaTrader.
Okay. My question is because I saw an option in NinjaTrader for the bot can start working, and I know that the bot will not put the
Exit.
stop. Yes, but in NinjaTrader we have the option to put the trailing stop, and each time that we have like 5 points up, the trailing can go with us automatically. So that's why I asked that.
Yeah, that's right. Because the copy trader on NinjaTrader is a little bit different. So you're gonna be able to do that, the trading stop on NinjaTrader. You'll not be able to do that on tradovate.
Okay, thank you.
All right. Any other questions, guys? Anyone? No questions?
Do we need a referral link for ForexC if we set up a ForexC account?
Okay, if you are going to use the ForexC, the link for you to create your account is on the dashboard. On the dashboard, we have all those cards. We have the cards for ForexC, for Apex, and other stuff. Click on that link. And the reason that it is better for you to, if you are trading MetaTrader 5, I recommend you trade on ForexC. And why is that? Because we have affiliate link on ForexC. And as an affiliate, I make money in every single trade that you take, because ForexC has a spread and they make money with the spread, right? They have a big spread and they make money with the spread. And just like all other brokers, the spread is big because they have to make money and they have to pay the affiliates. So the agreement that I have with Forexc, I know the owner, the guy is an amazing guy. And the agreement that we have on Forexc is I'm gonna send people through my affiliate link, but I don't want to have any commissions. We're gonna negotiate it a better spread for our users. So if you are trading Forexc without my link, you're gonna pay almost $1 per contract you're gonna take, right? In spread. If you are trading with my link, you're gonna pay 40 cents per contract per trade. So it's way better, makes all the difference. All right, guys. So the reason that you should be using our link, it's because we are leaving the affiliate commissions and exchange that for a better spread on your accounts. So you're never going to find any other platform to trade MetaTrader 5 with a better spread that we are offering you on Forexc. All right. So we are just leaving this money on the table because in the end of the day, we make money with Quantico Cap. That's enough for us. Every other deal that we get around, we're going to make sure that we are bringing people and using this money to do something better on the deal for the users, right? For example, Apex. On Apex, we have our affiliate link there, and we have our own coupon. Every time that you buy an account on Apex, on my link, on Quantico Cap link, I'm going to make $5. Every account that you buy on Apex, I make $5. It's not that much, but when we put together every single user that we have, is a lot of money. And what we are doing with this money, we are splitting this money with those guys working inside Apex that's giving us support on Quantico Cap. It makes all the difference because sometimes you have a problem that's not going to be solved so easy, sometimes not even be able to solve it, and sometimes takes a lot. But those Apex guys who are working with us, they are super fast and they are helping a lot. And in exchange, we are sharing our commissions with these people, and they are okay with that. The Apex managers and directors are okay with that. Everybody wins. Is a solution good for everybody, right? So every time that we have an affiliate link inside our platform, is because we are getting something on a deal to send back to our customers. Because in the end of the day, what I really need is to have more customers and more advantage for you guys. Okay. More questions.
So once I have an account with Forexc, because I don't have one now, but when I get one, when I refer someone to Quantico Cap, do I give them let them go through the dashboard so they can be connected through you, or do I get a link from Forexc?
If you refer someone to Forexc under your own link, you're going to make commissions on this person, but this person is not get a better deal on Forexc spreads. So it's up to you. You're going to make money with the guy, and you don't care if they are going to get a regular deal there. It's okay. But if you are referring someone that like you feel like, okay, I'm gonna actually refer this guy and make a better deal for him, tell him to subscribe on Apex under our link, right? So they're gonna have a better spread because nobody's gonna make money with this guy. Not even you, not even me. Nobody's gonna make money. All this money is gonna be used to give him a better spread. What you can do, in other hand, is you can refer this guy to Quantico Cap under your own link. So you're going to make commissions on this guy on Quantico Cap, and tell this guy to buy Apex accounts and buy Forexc under our link, because this is going to turn in benefits for them. Right?
Right. Gotcha. Thank you.
No problem. All right, people. What else? Any other questions? No questions. Larissa, tell me.
Almost. Okay, now I'm here. Hi, Eric. Exactly. Hi, everybody. Exactly. I just want to say thank you. I think so since the beginning, but exactly I didn't have time to start because of my work. But then after I do Vida Loca, I did, exactly. I'm not too proud because I lose, but then I understood what you say every time. Please don't make this. Stop, stop. But I want to say just thank you for everything. I'm really happy that I'm here. Exactly. I will say just thank you. I'm trying to don't make vida loca, but sometimes it comes.
I know.
But I stop.
I know.
So, but everything is okay. I'm so happy to be here. That's the only thing I want to say. Thank you so much for everything. I listen every day to you, and you never stop. I mean, you have all the effort, or you have all the passion to teach us to go ahead with everything. So thank you for everything. That's it. And
Thanks so much,
bye.
Larissa. All right. And guys, listen, don't be ashamed because if you did Vida Loca, if you broke a lot of accounts, if you lost money, welcome to the club. Like everybody, like we are humans and we are trying always to do a little better, to do a little further, to do a little bit more. It's natural. I'm not perfect as well. You guys can see my trades here. You see my stops and everything. I also take stops. I also broke a few accounts. I also sometimes did Vida Loca and I lost. I can bet you guys that I lost myself way more money than all of you guys together. You can put all your losses together. I lost more on trading because it's been years and years and years trading and trying to figure it out and hiring trades. And man, every single trade like that I hired lost money. It's a very, very hard business. The only good thing that I have myself that I say, guys, I'm good on this one because of this. The only special thing that I have, it's because I never quit. I kept trading and trading and trading, and I believe that it should be a way to figure it out. And again, I wasn't able to figure out that myself. So I brought good partners. We have a good, very, very good team of analysts. We learned together, we searched together, we got a lot of things together, and then we figured out together a very good way to trade because today we know how the market works. What is the thing that the market respects most of the time? And then we created the system. And after all this time, I am still trying to follow my system 100%. Sometimes I also do Vida Loca, and it's always bad. It's always bad. So don't be ashamed, guys. You're gonna do Vida Loca. You're gonna get some stops. You're gonna break a few accounts. That's gonna happen, and that's human. It's okay. Just keep going, and as soon as you can, try to impose the discipline that you have to do to be able to trade. Because in the end of the day, I'm here every single day talking to you guys about the discipline. So I don't make the many mistakes that I was making before, but sometimes I do some mistakes. But today I am way, way better, and that's why I'm being able to withdraw money. So what you're doing and the losses and everything is natural, right, guys? You're gonna start, you're gonna lose money, you're gonna break a few accounts until you figure it out that there is a reason for us to understand the discipline. Until you break a few accounts, until you feel like it is when you are trying to save the day and you are trying to close the day in profit, you have to leave the situation to understand what actually it is discipline on trade. So everybody's going to do that. Everybody's going to lose money. Everybody's going to break accounts because everybody has to go through the whole experience to understand what is discipline, right? Because if that was natural, we would never call discipline. We would never tell you guys, hey, watch your discipline, control your emotions. Because if it was natural, everybody would do it, but it's not natural. Trading is totally against uh, the human nature. So it's not natural. We have to take care of our discipline to keep going. So everybody's going to go through these bad moments. But I'm telling you, if you learn the reason why we have to watch and, and our emotions and discipline, that's the way to go. For example, Friday, it was a good Friday, but I stopped trading with $40 this Friday. You know what? Because I know how it feels to go in a weekend with a loss on Friday. It's always a bad weekend. Like there is nothing you can do because it is a weekend. You can't fix, you can do anything, and you have to spend the next 2 days powerless. So Friday, I trade, I make some money, I call the day because I know how that feels on the weekend. So watching our emotions and taking care of your discipline is actually what's going to change the whole thing. And one more thing, guys. One micro. Don't go to mini. 2 micros, 3 micros, depending on the size of your account. It's not about how much money you're going to make. It's about how much money you can hold before breaking your account. All right? In the end of the day, everybody who is having trouble because they are trading mini. Okay? So hold your contracts. I guess that's it. Any other questions before we go? No, I am here since 9:30. Still now went to the bathroom or restroom. I still have to pee for hours now. I'm exploding here. So we're gonna finish this thing. All right, guys. No questions anymore. No questions. All good. Tell me, guys, like a feedback on the Discord. Please, feedback on the Discord on the live trading room, which is the one that I have here now. If you guys are here on the live, tell me, are you happy with the Quantico cap system? And be honest, right? Don't have to give me a essay. Like I don't want to read a lot of words. Just like I'm happy, I'm not happy. I feel that could be better. I feel that it's amazing, or just give me a feedback. And if you are not happy, you feel that we could do something better, just let me know. All right? Don't do something like I'm not happy. Man, come on. Don't do that. If you say I'm not happy, tell me why so we can try to make it better for you guys. Okay, guys? All right. Thank you so much, everybody. Thank you so much. So this is it. I see you guys tomorrow, 9:30, live trading room in English. Wednesday, 9:30, live trading room in Portuguese. One day I'm going to find someone to help me with the live trading room in Spanish. I'm still looking for this guy. But it's going to happen. All right. And I see you guys Monday. Take care, everybody. Bye, 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 bye.